Top of the morning, traders, and happy Thursday, February 26th, and welcome to the most value-packed live trading show, where we live trade, break down charts, cover high-impact events, and talk trader mindset. Hope everyone had a great day yesterday and is ready to kick off another opportunity-filled day. We did have a red folder catalyst in pre-market, so just be on the lookout. We can see a little bit of volatility off the open. Exercise caution. Let the market digest the data. Look for your setups. What happened yesterday stays in yesterday. What happens today will stay in today. Let's look for the best opportunities, execute, manage risk, and let the probabilities play out. So we're officially open. Good morning, good morning, good morning, good morning, guys. Good morning, good morning, good morning. Goal is, of course, 50 likes. 50 likes before 10:30. We'll be on pace for some giveaways. Good morning, good morning, good morning on YouTube. Poll question for today: do we make all-time highs? Do we make all-time highs today? Simple yes, no. Simple yes, no. 694. So that support, right? We just broke below that support, and we continue to sell off. This one right here. You see the support right here? Look at that breakdown, guys. It doesn't give anyone a chance. All right. So now we can see right off the open. Look who's flying. The Dow's initially pushing. Q's in SPY. Pull them back. Right. Nice structural breakdown. Walmart pushing. Nike pushing. Nvidia dumping. Okay. So first few minutes at the market settle. Opening price for today is 693.29. We are at PML, guys. We're at PML. We are at PML. We are at PML. I'm keeping a close eye between 50% retrace, and here. There's a nice little key zone we can't get a response off of. Good morning, good morning, good morning, good morning, guys. I joined and paid. How do I see? So the link is in the chat. If you did join the Discord just now, the link is in the chat. So you have to go to we have to go into Whoop and follow the directions. Click and join the Discord, and the link to the Google Meets is in the live trading section. Live trading section. I also dropped it in the chat. Okay. So if you're having a hard time finding it, just let me know. Good morning. Good morning. Let us know where you're joining from, guys. Let us know where you're joining from. Okay, so right out the gate, we're seeing the Qs trading below the PML. Trading below PML. IWM fell off a cliff. So that's support off the open. That's support in pre-market that we identified. So we just had that complete collapse, complete sell-off, maybe some TP, some profit taking. NVIDIA, our good friend NVIDIA, is collapsing as well. Let's throw some alerts. Down goes NVIDIA. Down goes NVIDIA. So anyone who took NVIDIA straddle strangles, they got crushed. All those straddle strangles, like we were saying, guys, they got crushed because NVIDIA barely got to this expected move to the upside, but it's not what it does during the earnings call. It's what it does when it opens up. Sometimes it does it. Okay, look at this, guys. What's spiking? We're seeing a nice little spike here on the VIX. So I want to see if we hold above that 19. Okay, we're coming to that territory that we discussed that game plan for. All right. 5-minute orb army, of course. You have 2 minutes left. If you're taking a 5-minute orb, be mindful. We do have some a key zone in this territory, right? Just be mindful in that area. Be mindful in that area. We're seeing the Q sell off here. We're seeing the Dow starting to give back some of those gains. We're seeing IWM getting bought back up off that PML. Daily open today. 693.29. 693.29. So what setups are you looking for today, guys? What setups are we looking for? NYDO. Anything in particular? Any particular level? Okay. You can always share those levels with fellow teammates. Just give some to shed some perspective. Okay. So that PML 692.38. How do we interact? Good morning. Good morning. Good morning. PML is pre-market low. PML is pre-market low. PML is pre-market low. I'm keeping a close eye in this territory. Ideally, I want the VIX to stay below 18. If it starts to smash above 18 and starts to break away, if we clearly look bearish below these areas, right, retrace, reject, I'll take the retrace, reject into this runway. right? But I want to make sure that where there's seller stepping in. If there's no seller stepping in, I see a bunch of wicks. VIX holds at 18, starts to reject. I'll take this slowly back to PM8, PML, and eventually back to daily open. Okay, that's what I'm looking to do here. Okay, that's what we're looking to do here. First things first, ATR still atrocious. Okay, so far ATR is still atrocious. Of course, it needs to stabilize, and we need to get enough data to really shift the ATR from yesterday. We got to 22, so we are starting to increase from 22 because some of the movement is larger than 22 now. But let's at least get 15 minutes on the clock to see if there's anything there. If it starts to shift that ATR or expand beyond, let's say 40 to 50. Here's the 15-minute orb. 5-minute orb. $692.02. Q's 5-minute orb is 613.47. IW is out of here. IW is above PMH. Small caps running. Small caps running after grabbing PML. What a trap on small caps. Now they're above PMH. Now small caps is above dead upside breaker. So the two indexes above dead upside breaker is the Q's. Is small caps, IWM, and of course the Dow. Okay. 5-minute orb army did trigger. So you get that hold. You want that acceleration above that 18 on the VIX. Okay. Good morning, good morning, good morning, good morning, guys. Make sure to like the video. We got 70 people joining us this morning. 70 people joining us. Let's get 70 likes. The goal is 50 likes, of course, during first shift. All right, so 5-minute orb army getting compensated here. You want that hold below 691.88 to see if there's some follower behind it. If you did take it, if you didn't take it, if you're waiting after a certain time, that's fine as well. Whatever aligns with the things you like to do. Whatever aligns with the things you like to do. Look at this, guys. IW and the IW and the Dow are out of here. So as long as the Qs and SPY are moving in tandem, okay, that's what you want them to do, those two things to do. You want them to move in tandem if you're looking to go short to the downside, and you want those other two names to join the downside party. If I get a 5-minute combo off this area here, 15-minute combo off this area, nice hammer, I'll be there. If it's a clean close below it, decisive close below it, then I'll take it to the downside. So either way. To take it to the downside, I would like us to get back below that 18 on the VIX. I'm looking at the 694s for the calls, and I'm looking at the 690s for the puts. If I take the puts. Okay, let's see if we get a nice little drop. We're at that 50% retrace of the day as well, guys. 691.90, 691.89, right? We're at that 50% retrace of the day. So I'm going to let this thing settle. Get off that lock trading. Okay, let it settle. Let the back and forth be decided. Okay, see if the Qs go hammer on the 5. See if SPY goes hammer on the 5. If it gets a nice clean close below it, retrace, reject below 691.55. If we start to reclaim PML, if we can reclaim PML, of course, the initial scalp is that, and then we have another runway over here. If we can reclaim PML decisively, that 5-minute goes hammer, right? Don't mind using that PML as a reclaim entry. VWAP is right at that 692.56. Okay. See if you can hold that PMH. PML, sorry. Pre-market low. See if you can hold that pre-market low. If it gets a retrace reject off that pre-market low, retrace reject off of that VWAP, starts to slide. Starts to break. Downside. So we know in a few minutes it's going to have a decisive move off of this area. Right? So I'm just trying not to waste any powder trying to get the timing and just wait for it to be decisively declared. Okay, so you get that continued push. I want to hold below 691.89. I like how the VIX continues to go. Okay, break below those lows. Hold below 691.89. Trigger that 5 minute. Hold below 691.89. Okay, I'll take the puts right there. So I'm in the puts here. My risk is going to be that PMH, PML. So no close above that PML. See if we can get some follow through behind that move. Okay, there we go. Go, go, go. Want to hold below 691.55. Go, go, go. Okay, I want to hold below it. We can see some buyers try to push this thing back up. I want it to stay below 691.89. Go, go, go. Get some fuel behind it. Get some fuel behind it. Knock out those lows. Now we're in that runway. All right, we're in that runway now. Up 6, up 7. No wicks on the 5. Don't want to see a wick on the 5. So you get the nice little drop here. Stay below that 50% retrace. Stay below 691.90. So I'm in the puts here. Activating this runway. Okay, see if we get a nice little drop. Go, go, go. The Qs, I want the Qs to stay below 614. Okay, up 9. TP where you need to if you did take that. See if you can stay below here. Stay below here. The Qs are starting to make that early sign of reversal. So I want us to stay below here. Stay below there. Okay, starting to show some buyers stepping in. Okay. Let's see if we can get that nice push to the downside. Need that double digits. Go, 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 go. If I get 9 one more time, I'm going to have to. Okay, there we go. Take majority off right there. 12. Down to runners. Thank you very much. So get some follow through behind that. Up 11. Go, go, go. Go, go, go. There we go. There we go. Up 12. Now I want us to stay below here. Stay below here. Stay below here. We're in that runway. Up 18. TP where you need to. Take some off right there. I'll be on my last one. All right. There we go, guys. There we go. Up 20. All right. So this key zone could have given us an opportunity either way. We decided to take. Okay, we decided to take the downside because of confirmation, because of the price action that we were able to assess. All right. Now let me throw some waves and see if I can ride this runner. This runner's stop loss. Okay, no close back below this, back above this. Okay, see if we can hit that target. I already saw 20. This is a great time to TP if you need it. If you need to, I already took a majority off. Okay, you guys know the protocol on my end. Beautiful job. Who took that? You took that, Sancho? Or is that a different trade? Beautiful job, beautiful job. So you see the difference today, Firefly. I tried to wait. right? So that's the kind of approach you want to take with the orbs as well. So sometimes it does get the break and use the push. Sometimes you just wait for that confirmation that allows it. See if these runners can start to go. If not, I'll close them out. Okay. Dollar sign if you took that setup. Make sure you take those profits. I already saw 20+%. See if these waves can hold. Okay. See if we get another flag onto the waves. So if that was the trade that puts you in the green, you guys know the protocol. All right. If you were red yesterday, if you're green now, all right, tomorrow is ramp down Friday. Tomorrow is ramp down Friday. Okay, so you can wrap up your day. 2-on-2 on the Qs. Okay, that would be great. Okay, keep it, let it drop. Let it drop. And this week is all about, it's been about bouncing back, right? Bouncing back. And that's the point, guys. That's the point. That's what trading is about. You're gonna be put through the test. How do you respond? You're gonna get punched in the face. How do you respond? And I wouldn't say the past few weeks on my end is so much the setups. I think it's just my execution hasn't been as clean. But still, the system will give you what you need. Again, make sure you're TPing. If you're down to a runner, whatever, do what you need to do. See if the Qs can hold below 617.72. Okay, I like how the VIX continues to go. I don't want to see any reversals on the 5. Remember the scenario we used yesterday, trader 1 versus trader 2? So there's a hybrid model. I'm trader 1 with double digits, and runners I'm kind of trader 2. See if these waves can hold. As long as these waves hold, see if I can ride this thing. Wave rider. Okay. So if you're just joining, puts, first trade of the day, clean trade, babysitting runners, babysitting one runner actually, up 12. So even if it's one, even the way you treat one runner, treat it like it's something. Don't just treat it like, hey, I have to hold it to death do us apart, right? It's, hey, you know what? If you have a trailing stop, use that trailing stop. It's great practice. So we need to start going in this area. If we don't start going, VIX is still going north. The Qs, if the Qs can break that 612.72, hold below that, that'd be great. Five-minute, don't want to see a reverse on the 5. Let that drop. 15-minute orb army. Your lows are right here. So 15-minute orb army is right here. So again, if this 15-minute orb breaks, it adds fuel to this. So I want that 15-minute orb to break as well. Okay. Again, TP, guys. TP where you need to. Okay. Some profit is better than no profit, especially if you were ready yesterday. All right. This is the trade. If you're holding runners, do what you need to do. Beautiful job. Beautiful job. Beautiful job, guys. See if you can hold below 690.78. Some of the orb traders jump in. VIX still strong. 5 minutes still weak on SPY. 15-minute is dumping. Qs are dumping as well. See the Qs can continue to dump. Stay below 612.71. So my scalping brain is always thinking of, hey, time to get out, time to get out. All right. That's the nature of scalping. All right. That's why I like to alleviate that by taking the majority off. So the work has been done. The possible reversal is back above that 5-minute candles high. If we start to reverse on the 5, we start to put some pressure on the waves. We can start to see some buyers step in. Okay. If we close back above this 691.55, I'll get out of there. If we close back above those highs, we'll get out of there. As long as we don't close back above that 691.65, we'll see if I can hit this target down here. Okay. So you can see how quickly it moves. So you can be up 28% to negative. And trust me, with a full position, right, it's going to throw you for a whirlwind. Okay. Waves are still waving. I want those waves to hold on the 1. You can see the waves there. Out 30% ideal inputs. Beautiful job, Lynn. I failed at level 2 trader yesterday. Back to level 1. Yep. Trader 1. Yep. Like we discussed yesterday. That's the recipe. I think that's the recipe long term. Or 1.5 is the recipe. So does this hit target or do we reclaim and reverse? This 5-minute, we don't want to close on the 5-minute above 691.17. I want this to turn into a shooter or even an engulfer back to downside. The waves are still waving, okay, on the 1. Qs are still below 612.72. Want the Qs to make those new lows continue to drop. The orb traders are looking to jump in here. So Ripple Army probably jumped in here. No wave yet. 690.90 is the orb. Right? 690, yeah, 690.90. Okay. Do you see 688 put? 688 put to get to 688. We need to cross this area first. This area, we know there's going to be some contention here. Right, that's why that's the target. We know this is the area from yesterday, the infamous area. So we'll look to target that, and if that holds, we can possibly hit reverse and go to the upside off of that. Right, so we'll see. We shall see. VIX gave us a game plan today, guys. VIX gave us that game plan today. See if this bottom can break. Right, if you treat this as 2 runways, all right, this micro, macro. Right, if you say, hey, you know what, from here to here. And then from here to here. So if you're an orb trader, the 15-minute orb, this is where you exist. Okay. There we go. Get that continue push. So to give you some context, we did see 28 here, engulfer on the 5. That's good. The Q's falling off a cliff. See if that 5-minute candle can hold. I don't want this 5-minute candle to get flipped into bullish engulfing. They're going to try to trap some of those 15-minute orb folks probably. Get that pushback, get some pushback off that candle. Right. Try to see if they can absorb the buyers there and push them lower. Give them a little confidence and then just dump them. Okay. Qs are falling off a cliff, guys. Qs are moving cleanly to the downside, giving us the read. Anyone babysitting runners? Anyone babysitting runners? Good, good, good. All right, so buyers trying to step in here. Again, you should have been TP'd already. We did see 28 at peak. All right, so this is just reserved to exercise a little bit of greed with small amount of contracts. Just runner. If you are taking the orb, right, so far as the ripple, there's no waves, there's no nothing of that sort. So again, I want no close above here. If it closes back above there, I'll part ways. Okay. And if that's the only trade for today, guys, one and done, that was a beautiful trade. Again, the objective is after red to go back to green. Okay. That's it. You got to get used to doing less sometimes. Doing less and getting more. Okay. Doing less and getting more. Okay. Still within the jaws of the waves. Let's see if there's legitimate buyers. We did wick back above that level. Qs, since we're moving in tandem with the Qs, we were able to identify that very quickly. Let's go back to our chart real quick, right? So basically, you saw that breakdown in pre-market and the pre-market prep. This support break had enough fuel to drag us below 691.90, and you can see both the Qs and SPY broke that support, right? And on top of that, the VIX going in the desired direction. All right, that was the game plan for today. Game plan, we did a tremendous job following the plan today. VIX is starting to fade slightly here. We're still not fully in reversal mode. We do have a lot of those waves there, right? But look at the action, guys. It's very, very choppy action. Right? Outside of that clean move, there aren't too many clean setups here. Okay, what next level of resistance do you have? So 691, between 691 here. So this is resistance until proven otherwise. 691.65, 691.89. Okay. So you should already be scaled out. Okay, don't let a 29% opportunity to take profit slip your hands, and then you resort to something else, okay? That applies to most people. Some people, of course, they're at the level where they know what they're looking for. But in the beginning, guys, your objective is to just take profit. Don't worry too much about target this, target that. See if you can break below that orb. Okay, let's get the likes up, guys. We got 89 people joining us. Let's get 50 likes. If we can get 100 likes, okay, that was a beautiful, beautiful trade. Okay, 100 likes within the first hour. That would be amazing. So let me illustrate the difference to you. Last time we were here, it was up 28%. Last time we were here, it was up 22%. Now it's up 18%. So every time it comes to those lows, right, it's less and less and less because of theta. Right. About to hit target. Now I want it to hold below here. So a new cohort of Orb Army jumping in there. See if you can hold below that. Continue to push. Look at this, guys. Buyers at those lows. That's why it's so dangerous to short at those very lows. Even though you're right, if you have the wrong entry, right, you will be wrong. See if you can stay below here. Stay below that orb 690, 690.90. Okay, that's technically the orb. 690. I don't know what I got here. So this is the orb actually. So there was some contention. You see contention at all levels, meaning at those lows again, right? Buyers step up at those lows. So if you're a seller or if you're looking to take puts, right, you're going to get punished for getting at the lows unless you're going further dated. How we doing, strikers? Excel runners break even. Good, good, good. And put, good, good, good. So see if this level can hold here. See if this orb at least can hold. So the past 2 days, the action has been like very. You see the candles, very iffy. Look at that. You see that? So I don't want to close. I don't want to close back above the orb, or let's say wave 2. Wave 3 here, 691.15. Okay, let's see if we get an orb retest here. Okay, now wave set up on the orb. See if that leads us to the downside. So you can see some of the things that come with holding the target. Right, you're gonna sit through some profit, give back profit, back and forth, left, right. There's no left, but you get what I'm saying. Up, down. Okay, now we're coming to that territory. See if you get that nice continued slide. And you want to take that 15-minute orb, that wave, if you took the wave. Good. Good. Beautiful job, guys. If you caught that, if you're green, stay clean. Tomorrow's Friday. Tomorrow's the end of the month. Okay, so this week you've been put to the test. I've been put to the test. But we're going to always bounce back. All right? That's what it's about. Resilience. Already hit target. So if you want to close out at that target, go ahead. If you want to see some more, go ahead as well. Up 35. I want to see if we can get something there. If not, I'll close out right there. See if we can close below it right away. Right away, close below it. Get that complete collapse. That is a bounce area. Up 38. Okay, see if we can slide below it. Slide. There we go. Up 42. 44. There we go. Up 50. Okay. 53. 55. There we go. So now, next target. We're in the jaws of the gap. 54. There we go. I'll close out right there. Thank you very much. 54%. All right. So hybrid approach. Took a majority off. 1420. Closed. Last one, 54%. Okay. So that's how best way to navigate. Can you continue to push lower? You can, but use your no close. What's your no close? All right. What's your NC? What's your no close? And great way to bounce back. Okay, great way to bounce back. Hopefully, you guys are learning, guys, that sometimes you're gonna face adversity, and what matters the most is your response. How do you respond? All right, so kudos to you guys for bouncing back. Okay, and one thing is, as SAT trader, the response is key. We know how to respond. We know how to bounce back. We're not afraid to get hit in a fight. Right? If you're a fighter, getting hit is part of the business. Okay. All right. So now we can start to see a push back the upside. That is a critical level. Okay. We are in the jaws of this territory down there, and I'll sit on that trade for the entire shift. Let that cool off and see what's next second shift. So tremendous job, guys. Refill the lucky mug. So nice. All said and done, 50+%. Of course, TP's on the way. Okay. So anything below this is just a little bit of a bonus. You can't get greedy to the point where you're going beyond multiple targets, because this is a key zone. Whether I like it or not, there's a reason why this is my target, because I'm thinking that this is where the exchange is going to take place. All right, the sellers take profit, buyers see that as an opportunity, and they take it back the upside. Okay. Quick question of trading question. My quick trading question on approach. My runner was going -%, so I went out. When managing a trade, should we look at numbers and percentage or open? So my main thing is I do look at percentage with the majority of my position. Okay, that's just the reality of it. I need to know what's going on. With the runners, it can be a little bit different. Right? With the runners, once it's starting to go, you can just lay out, hey, you know what? I'll give it about a minus 5% buffer. That's completely up to you. Right? But I would say with the majority of your position, locking out at your percentage point is the best way to go, because this illustrates that fact right here, guys. The reason why I say that is because if you recall earlier, this initial drop was at 28, 29%. This initial drop here was at 22%. This initial drop here is at 14%. So unless you're trailing your stop, and using majority with a full position, unless you're moving your stops as you're going and you're trailing, right? If it gets back to your stop, it's no longer break even. It's gonna be minus. Right? It's gonna be minus. So the way you manage those runners is just completely discretionary. After you take your profits, after you take a majority off the table, again, that's what works best from my perspective. Some people might just like to hold a full position. That's up to them. But it's always good to scale out and then see where the runners go. Sometimes the runners get you stopped out. Yes. Have I been mismanaging a couple of runners in the past? You guys saw it, right? I cut a runner a little too short. My runner's a little too short because it got negative, and then 1 second later, it just dramatic drop. So you can't. There's no sweet science to managing those runners. So you don't want to get too caught up in how well you're doing managing runners, but you want to be highly, highly focused on what a majority of your position is doing. If you're locking the majority out, if you're managing your risk, because all the runners do is just cover all the outlier losses. That's all they're really doing. They're what all those runners are doing is covering the outlier losses. Maybe the time when you got stopped out, maybe your stop is 20%, you got stopped out 27%. So those runners are just getting a little bit of those outlier losses, small pieces back. A majority of the activity is what you do with the majority. Right? Say if I had the intentions to take this from here to here, right? From out the gate, maybe I'll use a 1 DTE. But my intention with that 0 is to see double digit. I want a double digit return for my time, if that makes sense. Okay? You can look at market structure as well, but again, sometimes it takes longer to play out. So if you're just adjusting, it's almost like you have to have a trailing. You have to trail your stop. So of course, in futures, there's no external variable. So if this is your trade. If this is from here to here, anytime price gets back into here, there's no depreciation in those contracts. The nature of options, as time passes, contracts depreciate. So it's almost like you have to move it along the way. That's why I constantly change the NC, the no close. Right? So my no close will change. Maybe I'll give myself a buffer, maybe a 5 to 7 to 8% buffer. Right? Hopefully that makes sense, Kevin. Where we bounce. Monthly open February. Why do I not have the monthly open on my chart? I must have deleted it by accident. So what's the monthly open level? Arden, what's the monthly level? Let me get that level real quick. That is a key zone. So even the fact that the monthly level is there as well just adds to the amount of confluence there is. 690 psychological level. Weekly upside breaker. Daily upside breaker. Or is that the daily downside breaker? Wait 1 second. Daily downside breaker. So prior day lows. Okay. Okay, good. 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 So far, pretty straightforward day, even though it was emotionally tough. Yeah, this here was a lot of back and forth. So you're gonna go through the emotional roller coasters when you're in a position, right? So sometimes it goes cleanly, sometimes it takes some time. But again, as long as you define your risk, right, you'll have a better chance of managing those emotions. If the risk is undefined, if it's make or break, It has to get here, or that's it. Then it's gonna be. Then you're gonna be going through every second. You're gonna be burnt out. You're gonna be burnt out. Beautiful, beautiful, beautiful. Looks like we might fill the gap. Yeah, we're in the jaws of the gap. Great point. Loopy edits. Great point, great point. Make sure to like the video, guys. If you're just jumping, we took the puts. Pretty straightforward trade. All said and done, 50% plus appreciation and basically, say, 20 minutes, 20, 30 minutes, less than 20 minutes, actually. And that's been the one trade. Okay, one trade for the time being. Say if someone is holding on to the runner and they're saying, hey, you know what, I'm using the waves. As long as the waves don't get flipped, I'm going to hold. Right? So they'll give up that 50 plus percent. Maybe they get this spike here. Maybe that leads them to 20%. Right? And so just up to every individual trader. But you want to take it from one level to the next level. If you use the levels, so the levels that I provide, right? They are their entry points, their targets, and their exit points. They do three things in one. All right. So for instance, this 691.65, 691.65, say 691.65, 691.89. Okay, so it's not just some random level. 691.89, 691.65. Nice key zone between those two levels. Right? So these are the levels. I give the levels every morning. The most important levels on my chart. Right? Those levels, if I can keep my trade ideas right or wrong, right? Sometimes, say if I decided to go long at this particular juncture. The reason why I didn't decide to go long, even though I did like that zone, is because I was keeping a close eye on the VIX. I was keeping a close eye on our neighbor, which is the Qs, understanding that we are breaking this in pre-market. Right, we're breaking this in pre-market, and most of the time when we do bounce, it has to be decisive. If bulls try to step in after a break and try to make something bounce, and it's not with force, oftentimes it leads to a dead cat bounce. Okay, so multiple things there. All right, smash the like button, guys. Smash the like button, smash the like button. Now, there are some people who are diamond hand. We do have diamond hand traders. Tremendous diamond hand trader on our team. Carla, right? So once the idea is provided, if it lines up with the things you do, that's up to you how you do it. But at the end of the day, right, you have to have something to show for it. Okay? Whether it's 10%, whatever it is, you have to have something to show for it. Now we're in the jaws of the gap. Watch out for that G50, 688.90. A nice breakdown there. Nice flag break there. The Qs gave us the read today. Qs give us the read. The Dow's coming back to that daily upside breaker. Those individual names are starting to go as well. Keep a close eye on Walmart below 124. Nvidia. Good night, Nvidia. Good night, Nvidia. This is why earnings trading. I fielded a couple of questions pertaining to earnings trading, and I talked about the dangers of earnings trading. We're at 19. VIX at 19. If VIX fails to hold that, fails to break through 19, like a glass ceiling, right? We can get a relief pop off that 689.90. Is this a downtrend? Absolutely. Right. This is the first leg, second leg. So let's see if we get some sort of bounce off of this. We're in the jaws of the gap from yesterday. We do have a key zone right here. If we slice right through this, that gap fill is right here. Back that weekly open. Okay. Anyone in the puts? Anyone in the puts? Make sure to subscribe, guys. Help us to get to 3,200 subs. 50 likes is the goal. Let's get to 50 likes. We have 90 people joining us. All right, 90 people joining us. If you're a first-time viewer, we go live every single day. Right, live trade, commentary, market analysis, breakdown. I talk about the rationale behind the trade. Go entry, exit. Okay, let's get to 50 likes. In the next 60 minutes, we'll do the giveaway. Holding puts from open. Beautiful job, Loopy. How are those puts looking? How are those puts looking? TP, beautiful job, Milton. And that might be it, guys. That might be the one trade futures. What we got in the futures? I just brought up your name, Carla, about Diamond Hand, and you probably holding this. I've been gone for a long time. I had so we're finally getting back. Welcome back. Hopefully everything is okay. Carla, welcome back. So Carla's our resident futures trader. Tremendous job at holding to target, high quality setups. All right, so let me just give you some context, okay? So those contracts. All right, let's those contracts, they were at 108. All right. So again, 108. I had these 689s. Okay, 689s are now in the money. They're 234. So over 100%. That's the power of 0 DTEs. Do you have to get 100% every time? Not necessarily. The fact that we blasted past the VIX, blasted past the 19, led to that breakdown. Look at that, guys. This was such a cleaner move than this. Right, this was so much cleaner than this. Piece by piece. Beautiful job. Look at that, guys. So we do have this futures corner. Look at this. We're back below the weekly open. What a collapse. Bulls just blew it. Right? Bulls just blew it. Just blew the lead. Now we're at that 200 EMA on the hourly. Wow. So those puts are, ATM is turned on today, guys. ATM is turned on today. Right? When it's a red folder, once it makes that decision, it goes. Okay, so you don't have to be the hero, guys, and try to catch the reversal first. All right, the simpler setup is just follow the trend, get some bounces, look for flags. Okay. I know it's cooler. It feels more stimulating to catch the reversals, right, and catch the bottom. I've been there. Sometimes I have a tendency to do that myself as well. Right, it's cooler. But sometimes the flag breaks when this is the recipe to being green. Right? Anyone still holding that, strikers? Someday I shall be. One day we will. Crazy start to the year. But we're all good now. Okay, good. 2 puts, runner 30%. Good. Beautiful job bouncing back, Firefly. All right, that's the DNA. That's the DNA of our team is resilience. All right, we show up. We're resilient. Because the market, just like anything else, guys, is going to try to break you. It's literally going to try to break your brain, break your mentality, break your mind. All good so far. Beautiful job, hero. So now let me go back to yesterday. So yesterday, they were doing all that back and forth. So one trader will trade yesterday, forces setups. Maybe he's green, maybe he's red to kick things off. But forces trades and is major red because they didn't properly manage risk. Another trader could take a loss yesterday because of the conditions, right? Maybe they weren't as ideal per se. And say, hey, you know what? I'm going to throw 5 setups out there, manage risk, doesn't work out, come back the next day. So now the trader that took that approach has a shorter path to getting back above water from yesterday. Because the market will give you the clean movement. But if you dig yourself a deep enough hole, it doesn't matter how clean the movement is. You're going to have to get multiple days of clean movement for you to dig yourself out. So once you feel like you're starting to spin, you're starting to feel like you're over trading and you get that urge comes upon you, that's a good sign. Okay, got to be done here. Because you know now if you continue, right, you're not getting the right reads and you're just trying to force a certain bias towards the market and it goes the other way, you have a bigger hole to dig yourself out of. or you have a bigger hold to cover. Right, so that's the importance. That's why you have to have that 5-day approach, the 5-day approach. Beautiful job, beautiful job. All right, tomorrow's ramp down Friday, guys. Tomorrow's ramp down Friday. Look how clean this move was. Look how clean this move was. So again, I might have been a little early to the party. All right, that was just the beginning. Okay, so just imagine 50% here. This is probably, who knows, 100 plus 200%. So now we're back below the weekly open and we fill the gap. Right, back below the weekly open, we fill the gap. Let's zoom out to our bird's eye view chart real quick. Okay, so guys, pre-market prep, the importance of pre-market prep. One thing we notice in pre-market prep, that's why we have the game plan, but we also make those assessments. What is, I won't say concerning, but what is surprising is the fact that no buyer stepped up off the weekly upside breaker. So that means the selling pressure, right? The selling pressure fueled by the catalyst, unemployment claims, fueled by NVIDIA earnings, okay, was so great that the buyers got overwhelmed at this technical level because they worked so hard to get above it, right? And with that swoosh, they collapsed. And look at this. So this was what we discussed in pre-market, right? This breakdown. And now look at this, guys. We are below 50% retrace of the month, below hourly 200 EMA. Okay? Hourly 200 EMA. All right? Let's get the likes up, guys. We got 100 people joining us this morning. Good morning, good morning, good morning. Okay, so puts is the way. Puts was the idea. Regardless if you got it, if you closed out, don't start getting FOMO and start chasing. Okay? All right, we're back below the yearly open. That unemployment number. Beautiful job, Firefly. Way to bounce back, 100% for Firefly. Let's go, let's go, let's go. Back below the yearly open. How long can it go? As long as it wants to go. Right? It just goes as long as it wants to go until it doesn't go. So far, no signs of bull stepping up. At least, look at this, guys. This yearly open, this highly contested level, no buyers. Right? That unemployment number, guys. You see how they made it green? All right, let the market digest the data. And then previous reading 208, actual, more people filed for unemployment. That can be a contributor. Right? We'll see. On the option stats, SPY puts show we're taking over volume, showing bears taking over. Absolutely. So if we're getting a sell-off like this, all indicators are going to say sell. So the yearly open, let's see if we get some sort of activity after the yearly open. What a drop. Right. Let's go to the game plan chart real quick, guys. Game plan chart. So complete violation of the key zone. Right. This is clear. So in this case, this is the key zone, the bounce zone. Why would we take this bounce if there's aggressive selling? We need that price action combination. Now we gave this up, and this is basically back to rejection zone. Just as that quickly. That quickly. So all the work the bulls were doing past 2 days about to get wiped out. But the dip buy opportunity is down here. Okay, we do have another zone down there. We do have the weekly POC at 684.49, 684.50. All right, so let's see how we respond to this yearly open. Do the bulls really want to build some momentum off yearly open at least? Get some sort of dead cat bounce at first. Eventually turn that into a structure shift. We'll see. My goodness, guys. Those contracts are... I usually look at 6 contracts at a time. They're so deep in the money, they're off the chain. Those contracts are $430. All right, so $100 to $400. So now when you see people say, "Hey, I turned $100 to $400," right? You can logically see, unless you get this kind of action, right? That's probably how is that possible, right? So what that means for you to turn 100 to 400, this is the kind of action you need to get, and this is the kind of action you need to be in. All right. What surprises me sometimes, if you know, if you've been doing this for some time, you know when someone says, "Hey, I caught a 300% trade on SPY." I was, where was it? All right. If you've watched SPY long enough, you know how much this thing moves. Because we know SPY like the back of our hand. There aren't those kind of opportunities every day. That's why it's so important not to try to catch those kind of opportunities every day. Those are outlier days. How we doing, strikers? How we doing, guys? How we doing? How we doing? How we doing on Google Meets, guys? Google Meets. 105, one left. Beautiful job. Team is absolutely crushing it. Max 2 loss on the day. I like that rule. What a melt. Yeah, unless you're going for, if you're going like those further data like the 5 points out the money, okay, I can see that. Like you get like 5 cent contract and it goes up. But who's really gonna buy? Think about it like this, guys. Would you buy 50 contracts or 100 contracts of 0 DTEs that cost 5 cents, 6 points out the money? All right, that's not in pursuit of a 300% gain. I would argue that's a very tough way to do it. 40, 100%. 40 is good, 10 is good, 15 is good. All those are good, guys. Especially if you're doing it every day. Okay, yearly open. Okay. So the buyers stepping up off that yearly open, stepping in, see if they can push this thing forward. Again, guys, make sure to like the video. Make sure to subscribe. We got 104 people joining us. Let's get, we can get 100 likes before 10:30. That'd be great. We'll do a giveaway, guys. Let's get the likes up. If you're a first-time viewer, let us know you're joining from long-time viewers. Take the next steps. Delay-free, ad-free stream. All right, so you don't miss the idea. There is a slight delay. The idea today was pretty straightforward. Right here, puts here. We're able to ride it here. Okay, last exit, about 50%. And then we get this nice structural break. Right, nice little relief pop. Buyers try to bounce it back up. Too much pressure. Slide down. And look at this. All right, so guys, strikers, folks on YouTube, folks on Google Meets, right? You don't have to try to catch the bottom. All right, just take what the market gives. This is a clear downtrend. So look for things like EMA test. We haven't got that 9 EMA test on the 5 yet. All right, so there's those textbook EMA setups with price action combinations are going to be the way to go. All right, you can see here too, right? Nice smash into those waves. If you use the waves as the runner, if you use your waves to manage the runner, you'll still be in the position. All right, so there's still a way to be in this position. So with a runner. Still away. Okay, I'll take this off. IW below that daily downside breaker. If this thing continues to collapse, look at the longs trapped above yearly open. We head to 682.68. Let this sell-off just die down for at least first shift. What a sell-off. So now the response becomes, does the sell-off continue? All right, so think of it like this. First hour of the day, complete sell-off. We can all agree. It doesn't take rocket science to figure out that we sold off. All right, first shift. Second shift, we get a new candle. Think of it like that. The entire second shift will be a new candle. My primary focus would be, okay, as this new candle emerges, step one, how do we interact with these lows here? And if it opens here, how do we interact with those lows? Do we come into those lows, we continue to sell off, I'll look for retrace rejects, or do we get some sort of sweep of those lows and a gravitation back towards some internal key levels on the day and equilibrium on that shift? So that's what we're gonna have to solve for. And that's where the opportunity is gonna be. All right. So even if you're looking for that dead cat bounce, 50-50, we're so far away from VWAP. So far, that 9 EMA is at this level here, 687.68. That's where it is right now. Now, new shift. First shift is in the books. Let me know how you did in first shift, guys. For those of you who were red yesterday, if you bounce back today, tremendous job. You can be done. All right. Have the discipline to be done, regardless if it's small green. All right. You need to see green going to tomorrow. Tomorrow's ramp down Friday. And, of course, start crafting that plan for March. March is upon us, okay? So these are the shift lows. Let's get the likes up, guys. Make sure to like the video. Make sure to subscribe. Make sure to subscribe. 66% of the chat said no all-time high today. You guys were on the money. Good, good, good. Good, good, good. So yearly open. Keeping a close eye on how we interact with these lows. Keeping a close eye. Keeping a very close eye. 5-minute reversal. Again, this reversal is not to reverse the whole thing. It's just this reversal can be, okay, if you're still bearish, you want this reverse, grab those lows to be a dead cat bounce into some EMAs. If you're a reversal trader, you're looking for the reversal into those EMAs initially. And then see if there's some more room after that. All right? How'd you guys do during the first hour? Folks on YouTube, let me know. Let us know how you guys did. First shift, 3 for 3, done for the day. ERA, beautiful job. VIX still climbing. VIX is starting to slow down at that 20 here. See if it can blast past 20. More than likely, it gives us another leg to the downside. If we start to top at that 20 territory, if we start to top in that 20 territory, between 20 and that 20-25 territory, and we start to slide to the downside, that can open up the door for possible grab and a reclaim of that yearly open and a push to the upside here. Will not overstay my welcome. Done for today. Beautiful job, guys. If you're done, the rule is on YouTube, in our strikers, if you put done in the chat, okay, you're giving us your word, you're not taking any more trades, especially just those regular trades, okay? That's the rule. I mean, what more do we want during the first hour? They gave us this, especially after a day like yesterday. Okay? They gave us this. So if you were short here, if you took the 15-minute orb, the bear flag, 30-minute, all the orbs, basically up to the 30-minute, provide an opportunity. So now let's see if we continue or we get some sort of retracement. Okay. A little bit of corrective activity back the upside. Rebalance everything a little bit. That's going to be what I'm looking to see. I'll be on the lookout for that. Do you think we continue selling tomorrow? For tomorrow, no clue, right? It depends on how we close. For me to give you a proper assessment, I want to see what that last hour looks like and how that daily candle looks for me to give you an early assessment. But as far as tomorrow, it can go either way. The nature of this market, within the next 2 hours, we can even work our way back to the upside. Okay. Okay, want to see how we interact with those lows. We do have another key level down here. Weekly 50% retrace. This is not looking good for that weekly candle, guys. Not looking good. All right, if we fall below 682.88, not good for the weekly candle, because now it starts to go from it was directional to the upside. Now it starts to lean towards being a shooter, and if the selling continues, worst case scenario, it can turn into a engulfer to the downside or a 3 down candle. Okay. How many likes do we got? Let's get the likes up. Let's get the likes up. Make sure to like the video. We got 103 people joining us this morning. Good morning. Good morning. If you're just joining for the first time, let us know where you're joining from. Okay, make sure to hit the like button. We got 40 likes, 100 plus people. That's less than 50%. 50% of people liking. So again, every other person has not liked the video yet. So those likes tremendously help the stream, guys. If you do find value, subscribe. Hit the like button every time. If you've been watching for 3 to 5 episodes, take the next steps, join our community. All right, we will go over the giveaway, of course, the boot camp coming up. We'll go over that in just a minute here. But we need to unlock the giveaway. Unlock the giveaway. So now we grab those shift lows. All right, we grab those lows. Do we have enough momentum, right, piece by piece to get above the yearly open? If we have enough momentum to get above yearly open, right, then we can start to work our way piece by piece to the upside here. And that puts us still below that 9 EMA. All right. On the lower time frame on the 1, of course, is the waves are still going to be there. There's some pressure behind the waves. The Dow's starting to bounce off those lows. 5-minute reversal. IW, 5-minute reversal. The Qs have not reversed yet, so the one we want to pay attention to closely is the Qs. Qs and SPY have been moving in tandem the past 2 days. That's giving us the reads, right? So it's going to come down to, do we have enough momentum off this grab to get above this level? Right? Because this, if you're taking that rejection off that yearly open, that's very, very shallow. Meaning, it can continue to go lower, but it's shallow, right? You're paying close to the highest price of the day. All right, so this is what we're going to pay attention to. Can we reclaim it? If we can reclaim it, we work our way to this territory up here. And then we have all these levels to address up there. Let me make this yellow. So moment of truth is going to be determined by that yearly open. Who wants it? Do bulls want it? Do bears want it? Who wants it? Who wants it more? 5-minute reversal trigger 685.82. All right, 5-minute reversal trigger on the Qs right there as well. We already triggered on the IW. Already triggered on the Dow. See if we can get that hold. What would really help this accelerate is if the VIX gets below 20 and starts to work its way to 1990s, 1980s, and eventually 1950. Okay, Q is starting to wake up. I think 680 as well. Okay. How are we doing, strikers? I'm done for the day. You gotta go. Have a great day, Carla. Welcome back. Close runners, 80% done for the day. Beautiful job. I'd love to see done for the days. Done for the days. DFD. All right, DFD. I think I have one or two more in the chamber. All right. If not, I'll be done as well. That reclaim was nice, right? So you can see the logic behind the reclaim. So that's a great price study. Right, so it grabs these lows. Once it grabs those lows, it gets above 685.71. When it gets above 685.71, you want to look at the neighbors. When I say neighbors, IW, the Dow. Those are distant neighbors for now. But the neighbor that's copying everything we're doing is the Qs. Once the Qs got above 605.81, right, we're just trying to keep up with the Qs. That gave us that nice little reversal trigger on the 5. Right, so this reversal trigger by no means we're going to reverse in the next 10 minutes all the way to the upside. Right? Because it takes more than one push up or more than one individual push up. Right? Unless it's a V-shaped recovery. which is rarely takes place, for us to even create new structure, for us to even create a new cycle. So it's almost like we need to make a micro cycle. So you have this macro bearish cycle. You have to make this micro cycle within that macro bearish cycle, and eventually that micro bullish cycle starts to turn to macro bullish cycle, piece by piece. Okay. Anyone catch this? Now that 9MA, folks, we're waiting for that 9MA. It's starting to trail in on the 5. It's in that 687.24 territory. Let's see how closely that coincides with here. So closely coincides, not exactly with that level, but it kind of gives us a nice little buffer between that weekly open, that bottom of the gap, that 9MA, all encompassed in this zone. So that's the first real test for the bulls. All right, they were able to step up. We grab these lows. There's the manipulative action there. Get that reclaim. So in this case, if you are trading, right, if you're trading the smart way, or systematic way, right, you play the grab, nice combo, into here, see if those runners run, or you play this reclaim into there, piece by piece, especially with those zeros, and then see if you can get that more follow through behind it. Right, and then if you can clear that territory, have a lot of traffic up ahead, right? It's going to maybe take a little time to clear that territory. Then, of course, above that traffic. And now the bears are tasked with making a decision here. Do we dump this thing back the downside? This is our first legitimate bounce off those lows. Do we dump this thing back the downside becomes the primary question. Okay. So the reversal on the lowest time frame, the 1 already took place. Reversal on the 5 already took place. The reversal on the 15 has not taken place yet. On the 15 is going to require us to hold this hammer on the 15, somewhat of a tweezer bottom off that weekly POC, 684.49, get that bounce. Okay, the 15-minute reversal, you can see, comes right into that weekly POC. Okay. I need this hammer needs to hold. And then get above that, and of course we have that 50% retrace of the month, and that 200 MA on the hourly to address. Okay, piece by piece by piece. Make sure to like the video, guys. Let's get the likes up. Let's get the likes up. We got 105 people joining us. Make sure to subscribe. 3,200 subs is the goal. We can easily get there with your support. If you're a first-time viewer, let us know where you're joining from. Okay, long-time viewers, how are we doing? Look at that level 2, time and sale. Some large orders coming in. Let me filter this actually. All right, I want to see the large orders. Since we can get some large orders coming in, I want the large orders. Okay, I want all the orders above $4.99. So it filters it out for the large orders on the time and sale. Sometimes it moves fast because you have a bunch of small orders. But now pay attention to time and sale. That's 686.91, 686.90, 88 territory. Explain the colors of your candle. So orange is bearish, green is bullish. Bright green is super bullish. Bright red is super bearish. Okay, so that 9 EMA rejection is in this territory here. See if you get some sort of combination to the downside across the board. So all of them are going to test that 9 EMA. The waves on the 5 are starting to flip. Imagine V shape. That'd be something. That'd be something. See if you got a shooter in that territory. See if you got a shooter in that territory. No shooter continues to propel forward. It means the buyers continue to push this thing. And then now look at this, right? We're below the 20 on the VIX. So the only thing really stopping it is some selling pressure on the 5. Keep a close eye on shooter candles on the Qs. Keep a close eye for shooter candle on IWM as well. IWM is at VWAP. So IWM is leading the way. It's the first one to get to VWAP. No shooter candle. Buyers persist. Maybe a rejection from 9MA on the 5. That's what I'm looking at as well, with the waves and these key levels, right? But no signs of rejection and weakness yet. Jimmy squeezed twice in human history, probably just a normal sideways. Nothing major is happening yet. It's another boring Friday tomorrow. So I probably haven't taken a look at Jimmy's charts in years. Where's Jimmy priced at now? What's Jimmy's price? So get that 5-minute shooter to close. Okay, like that rejection. See if the VIX can start waking up here. I like that engulfer. Okay. See if we get a nice little 1-minute bounce. I'll take that entry to the downside, risk being that weekly open. Okay. Two minutes left on this candle, on the 5-minute candle. So we get some sort of bounce here just to reduce that price of those contracts. Small little bounce, small little wick to the upside. Trying to just time that entry. I'm taking my time. I no rushed entry. I don't want to pay all the way down here. Right, that was the issue that I had yesterday. My fills were at the very lows. So we get one more little push. We're basically at half-life of this 5-minute candle, right? See if we can get to that 1-minute mark on that 5-minute candle, and that shooter holds. So you get that 1-minute mark. To rule out that 5-minute candle doesn't start to wake up and start continuing to push, because it is pushing. Okay. One minute left. So I want that 5-minute candles to start leaning towards doji. If it doesn't start leaning towards doji, I'll let it be. If we can fall back below this territory here, I'll take it short. If it continues to accelerate, I'll let it be. So you can fall back below that territory. Okay. 1 minute left. Only issue is countering the VIX. See if we get one more little drop below it. At 5 minutes, still looks healthy, still looks bullish. So it looks like that shooter's course correcting, unless we get a nice little drop here to impact it. No signs of bounce on the VIX. See if we get one more drop. One more drop below 687.24. This trade will be using less size. Okay, let's see. I'm looking at the 686s. If it does break down, if it continues to go, I'll let it go. So very calculated, methodical entry. Because the bull, we did grab for our shifts lows. We did grab for our shifts lows, and we have to respect the fact that might try to push this thing. So I'll wait for extra confirmation. Okay, get back below that level. Get back below that 9. 687.24. In the meantime, if the VIX can at least get back above that 1959, that'd be great. Okay, get back below 687.24. Let's see if you get that nice little drop. Want a nice close below 687.24. So no shooter candle yet. The waves on the one have flipped. The Qs are starting to sell a little bit. See which one can become directional first. If you're waiting for that directional move, you need that break below 686.65. I want to close below that level. And my risk would be that weekly open. Get that close below 687.24. Front running the VIX here slightly. Get that close. Okay, I'll take it right there. I'm in the puts. See if that continued follow through behind that move. Our risk being the weekly open. Okay, I want some follow through behind it. In the meantime, if the VIX can start course correcting, that'd be great. On a 5-minute candle still inside, so a little front running, using those technical levels to get ahead of that push lower. See if that key zone holds. So I'm in the 686 puts. Go, go, go. Qs. Need the Qs to break below 606.80. 606.80 on the Qs. If they can do that, that'd be great. If SPY can break below here, that would confirm the reversal back to downside. If we get back above 687.80, I'll get out of there. Down 13, 14. Okay, I'm out of there. So I stopped out 19, 20%. A little more than I want, but I have to respect the fact that we're starting to push higher, and there was no close back below it. So I wanted to see if there was some follow through. Did see a little bit of green, nothing to take profit. VIX continues to collapse. And we can drop back below it. I can re-engage. Drop back below, I can re-engage. If it continues to accelerate, I'll just let it be. That means the buyers all the way from here are starting to push this thing back to the upside. On 1052. Let's get caught up. Okay, most frustrating day ever. Missed the first leg due to my job, which I probably wouldn't have taken because early in the day. Okay, let's see if this thing sets back up. Okay, let's see if it sets back up. Let's see if it sets back up. If it does, I'll re-engage after that stop out. Get below 687.24. That 5 minutes still has not confirmed, right? So if you're waiting for the 5, if you're exercising a little more patience, waiting for the 5, there's no signs of that selling on that close. The 15 already reversed. It's at that 200 EMA on the hourly. See if that continue to push lower. 687.24 re-engagement. Get below it. Qs get below 606.80. That'd be great. The official reversal level on the 5 is 686.64. I'm trying to get that early C at 687.24. Right, if it gets above 687.80, which is the weekly open, that means the bulls are there. All right. So now there's some legitimacy behind this grab, behind that yearly open reclaim. Okay, so now if we do the 50-50, 50-50, the nifty 50. That puts us right at that TOG, that 50% retrace of the gap is essentially the 50-50. The gap that we just filled. Okay, still not out of the clear yet. VWAP 688.42. The only thing above VWAP currently is the IW. Inside count on the Qs. This would be critical. Okay, VIX is starting to bounce here. If the VIX can get above that 1960, that would help the case. We break back below 687.24, I'll re-engage. Ideally, Qs reverse to the downside as well. 606.95, that'd be great. And regardless of how it plays out, that'll be the last trade of the day. No open position. So the position you can see on YouTube. VIX get above 1969. The first setup here was front running. Okay, the Qs need to break 606.95. Qs are about to reverse. Okay, see if you get that nice break. Okay, I'll take it right there. I'm back in the puts. Risk being the same thing. That weekly open. Okay, so you get that full breakdown. Continue push to the downside. And this will be the last trade of the day. VIX get above that 1969, 1959, so 1960, that'd be great. That should give me about 10-15% window into that 687.80. Down 10, down 11. About to get stopped out here. Okay, stopped out there. All out. So I'll give it 2 attempts. Couldn't get that continue push lower. So 2 stop outs here on those puts. And on that note, we'll be done. So I don't want to give everything back. Give a little bit back here, but don't want to give everything back. Okay. So again, couldn't get that continued follow to the downside. Qs end up wicking. Looking, of course, in hindsight, the grab, reclaim was nicer. We're spending a lot of time at this weekly open. VWAP was coming in. I don't have enough risk to take it all the way to VWAP. No shooter on the 5. All right, so 5 is still a little front running there. See if I can front run and get a better entry. And 2 stops there. Let me go to the chat real quick. Most frustrating ever, missed the first leg during work, which I probably would have taken because earlier in the day, but the second leg half and was ready for the puts, about to press it, and my computer overheated. Wow. Did it fill you for the position? Small loss. Missed trade means you didn't lose any. Yeah, if you didn't get filled for the position, that's okay. More frustrating is losing every trade you take. Had to jump into a quick meeting. Last IAM contract was stopped at 25%. We'll review some potential swing trades. You've been on fire for those swing trades. This thing can still break down. All right, just pay attention to the 5-minute. Okay, the 5-minute, get that 5-minute combination. If you can exercise a little more patience than I did, there might be something there. Agreed. I'll take it to heart, but I would be in a great bounce back. I had to plan. Allowed me to hit the goal today. Market is quick to take back profit. Just try to protect your position sooner. Like every 10, 15%, 15%, 100%. And you don't even have to have runners if you don't need those runners. Best trade was the last one. I caught the reversal. Beautiful. Yeah, this reversal was the cleanest, cleaner move. All right, cleaner move on the reversal. If it breaks below here, continues to sell off, then you get stopped out. And the reward, of course, from here to here to here to there. Beautiful job. We're able to take it off these exact lows of that nice reclaim of that yearly open. If you got those exact lows, get that grab of the low, sweep of the low, push back up. That was nice. So in this case, what I was seeing over here was to see if that reversal was going to get stifled and it was going to bounce back. I was going to reject and bounce the downside. My risk being the weekly open. If it gets above weekly open, more than likely we'll start to crawl back the upside. Beautiful. That was a nice sweep, second candle. And that thing printed quickly. So this is what you want to see with those sweeps, right? Yesterday, on those sweeps to the upside, right, there wasn't that quick move. Right? It has to be decisive. It has to be decisive. Let's get the likes up on YouTube, guys. So still no signs of us breakdown on the 5. If you're waiting for that breakdown, 9 MA, VWAP, all the key zones in this territory, we still haven't created that full separation away from it. We're starting to get sticky in this territory. Keep an eye on those levels. Looking for those strat combos off that level. V pattern, how rare. I don't know if you did the giveaway. Oh, no, I didn't do the giveaway yet. Let's see how many likes we got. Make sure to like the video, guys. Make sure to subscribe. And we're not at 50 likes yet. Let's get to 50 likes, guys. We have 100 plus people, 150 people, 115 people joining us. Did take 3 trades. This is one idea, 2 trades. Stopped out on both. Nice trade, of course, was the first trade there. So usually what I do is after I get a trade that works in my favor, next couple of trades, I like to size down. Right? So you don't give back too much. If it worked in my favor, what I was looking to target was, of course, get that double digits, get that hold. All right, I think I haven't been exercising as much patience on the hold. I get that hold below it. The first one, I like that because it held below it, but it just got back above it. Right, so if we can get that follow through to this territory, but the risk is defined as the weekly open. Right, I want to operate in this window here. Operate in that window there, and we're starting to push the VWAP. So that VWAP test is coming up, guys. VWAP test coming up. So no shooters yet. Got a doji on that last candle. No shooter yet. Just keep following that candle. The 15-minute reversal is already taking place. The hourly reversal, 25 minutes left for the hourly candle. The tail, I think, was once the VIX broke back below 20. We grabbed these lows. And now we're starting to slow down a little bit in this area. You can see on the 5-minute, right? Could have done a better job on waiting for the candles to close. Little eager, wait for a shooter. Wait for a shooter to close and then wait for that break at that level. So far, we're starting to fade slowly, but still less and less bullish, but still green. So if you can get a nice little shooter candle to close, get that break. If not, this thing continues to push. Because now if you're managing this from the standpoint of a bull, say if you're a bull, right? If you got this reversal at that 685.82, what you're looking at is, okay, no red candle yet. No red candle yet. Okay, some pushback, but no red candle yet. Very similar to this reversal here. And this is the drop from this morning. Right, so is this drop, if we're going to make any, if we're going to make up for this drop, okay, that area is right there. 50-50. In this territory. Near that 20 MA. All right, slightly above VWAP. So the question is, do we have enough fuel off of this reversal? We're trying to reclaim that weekly open decisively to get above here. Okay, so it goes from being a reversal on the 1, right? And then now, if it gets above that, it can start to turn to a legitimate reversal of that move there. Okay. Okay, now we're starting to get some selling. So see if we can get that break below 687.57. So you see the difference in being patient, waiting for that 5. Okay, get that 5 to close. Engulfing candle there. See if that engulfing candle can hold. Okay, let's get the likes up, guys. Make sure to like the video. Make sure to subscribe. Make sure to subscribe. 50 likes, we'll do the giveaway. 100 likes, we'll do another giveaway. So the faster we get to 100, the more giveaways we can do. Help us get to 5,200 subs. Make sure to share. Make sure to like. And we're going to be giving out the boot camp. This is the giveaway, guys. So put your names in the chat. We have more than 50 likes. Giveaways for this boot camp here this Saturday. So this Saturday, for those of you who signed up, for alumni, for everyone who attended before, if you want to attend, of course, it's available for you to attend. The boot camp is a Getting Started Day Trading Boot Camp, live boot camp, February 28th, 10 a.m. Eastern. It's live, not pre-recorded, not webinar. It's completely live. All right, so foundations of day trading, risk management, position sizing, how to read price action, live market breakdown, beginner friendly. Again, I like to keep it at small classroom size. Only $99, early entry, 20. I refresh that code, right? So use the code early, 20% off. All right. And what do you get? 4+ hours. The technical analysis reference PDF, options simplified PDF, Shockwave 15 course, my ebook, all that stuff. All that stuff come with it. So this is the giveaway. If you don't win the giveaway, you can sign up. All right. If you do win the giveaway, this is what you win. Okay. So we'll do the giveaway at 11:30. Okay, there we go. So now SPY is starting to work its way back above that 200 EMA on the hourly. IW, what a whirlwind on IW. Went bearish engulfing to now it's looking to go bullish engulfing. Walmart, nice breakdown. How about Nike? Nike didn't cross those lows, did break to the upside. Nike broke out to the upside. Okay, 11:30 we'll do the giveaway. So at this hour we'll do the giveaway. Okay, now you can start to see we're starting to make some strides above that weekly open. Slow grind above it. So I have to respect even the last 5-minute candle. I have to respect that the bull stepped up there. But that slowdown, okay? The action we saw this morning was very clean, or relatively clean. And then now it just becomes messy. So are we going from nice, clean action to reverting back to some of the kind of price movement we saw midday yesterday? Possibly. Beautiful job, Hero. After a sweep, that sweep was beautiful. Okay. So names in the chat. Let me pull up the wheel. Let me pull up the wheel here. Okay, so put your names in. Okay, names in the chat. All right, you see the slowdown, right? Very sticky. So the 1 DTs would probably be the best way to sit through this. You can see our members, guys, tremendous traders. 38. That was the sweep of those lows. That reversal catching the bottom. Hero caught the bottom there. What else? Small loss. Good. 80%. Done for the day. 3 for 3. 40% there. 300%. Oh, that's you're giving the example. 105%. 100%. 20%. Green week. 1600. 70%. Orb. Green. 12%. Okay. That drop was beautiful. What else? 30%. IWM. Hero caught it. Nagu caught it. For 8%. Look at that. And I do like this here. Okay, so that's just the first 2 hours, less than the first hour. All right. So now it's just basically overtime or extracurricular trading. Okay, the names. We got Gabriel. VWAP. We're at VWAP. Do we break VWAP? Or do we reject out VWAP? Break VWAP or reject? Gabriel. We got Sue. If you want, guys, make sure to send me the DM from yesterday. Okay. Winners, send the DMs. Henry. And Jessica. Okay. Then SPX. VWAP is right there, 688.38. Bella. We got Beck. We got Hussein. We got Orlando. We got VP. That's Vladimir Putin. We got Joe. We got Joe and Vladimir Putin in the chat. Joe Biden and Vladimir Putin. Azar. We got Michael. We got Huey. Huey P. What can I type today? Huey P. We got Tom. And we got Shane. And we got Ganache. All right, put your names in. Giveaway 11:30. Smash the like. We'll do another giveaway for the boot camp. So the best setup so far in second shift was to grab those lows. Right. Best setup was that grab those lows. And now it turns into that slow grind higher. Anyone babysitting runners? Anyone babysitting runners off that grab? Now we're above VWAP. We got Mim. We got Brad. Okay, there we go, guys. Once it got that weekly open, now it has the it's in the jaws of the gap. Remember that gap? We gapped the gap up from yesterday. We filled the gap, and now we're back in the jaws of the gap. So look, we're in the jaws of the gap. We filled it with minimal issues. Now we're starting to reclaim it essentially. Wow, that reversal was beautiful here, guys. So these are the kind of setups got to be there for. So no signs of slowdown. To get a little selling pressure, not enough to close at 5. Yep, above that VWAP, continues to push. It's at that 50-50. Back above that weekly open, back above that yearly open. Now it has some steam, guys. It has some steam behind it. Next level, of course, is up here. Same thing with the Qs because you're pushing to the upside. And watch out, guys. Brad is in this QQQs. So that's what you want to look for. So from shift to shift, that's what you want to look for. I could have done a better job taking it, right? Rather than using the fuel to see if I can take it back to downside. Sometimes that becomes the challenge, but this is a textbook. If you've been trading long enough on our team, that's a textbook first shift grab. First shift grab was nice. Our main thing is, guys, don't chase, okay? If you're done, be done. Oh, did I say Beck? Should be Bev. Okay, yeah, Bev. There we go. Correction. Okay, Bev. Here we go. There we go. So 11:30, we'll do the giveaway. If you are jumping in, guys, I have a lot of new members in the Apex Spy Strikers. Drop an intro. Go through the intro. I'll go through the intros as well. Welcome to the team. Tom, welcome Alexa. Go through the intros of some of the other traders that are on the team. All right, and welcome home. Okay, if you have any questions, reach out to me. If you're having issues logging into the Discord, okay, I'm not sure if you guys can see the screen. It's here. All right, just drop an intro in there. Well, I'll go through it. All right. I do post the live trading Google Meets link here every morning. So if you're looking for it, I have the game plan, of course, in the mornings. Between 7:30 to 8:30, I drop it in there. I give you the levels. I'll give you the zones. I'll give you the rationale, right? In pre-market, and then in the pre-market stream, we solidify the plan. Right? And then the link is there. Now I'm also live on audio as well on Discord. So if you're on Discord audio, I'm there as well. If you're on the video, Google Meets. If you do like to jump in on the audio on Discord, okay, so watch out for that shooter. And sometimes I might forget to jump on audio, so just shoot me a reminder. Hey, can you jump on audio? Right? It doesn't take me much to jump on audio. Okay. BG Mikey B, BG Mikey B, BG Mikey B. Let's see if we can get 100 likes, guys. If we can get 100 likes during that time, we will do 2 giveaways in one. We're at 71. We have 115 people joining us. First time viewers, let us know where you're joining from. Put a 1 in the chat. If you're done for the day, I'll be done for the day. I did take a nice trade to the downside there. Gave back some profits here. Right, but I do like the setup. Maybe I could have just waited for a little more patient. But this was the one. This was the one. But this one, you have to take it in the max pain. What I mean by that is you're taking it against everyone else. So this reversal signal, you're not going to see it on indicators. So once it reverses, it starts to hit the indicators. It starts to flip the waves. By the time the reversal signal shows reversal, price is probably like up here. Right, so make notes, guys. That's a textbook reversal setup. Grab a first shift lows. Grab a first shift lows. Over the weekend, guys, keep in mind next week is a brand new month, so you have to make your weekly adjustments. Go over your plan for the month of March. All right, really review everything you did. Take some time. Take an hour, hour and a half. Brew yourself a nice cup of coffee. Brew yourself a nice cup of tea. All right, and open everything up and go over everything. The biggest takeaways, the things you did great this month, the things you can look to clean up, and what is the plan for March? Because now there's a new month upon us. Of course, this weekend we have the boot camp, right? So keep that in mind as well. So set aside maybe an hour, hour and a half, a little more than usual, because this is your weekly recap for yourself, and as well as the monthly prep. And for the monthly prep, you're not doing anything overly technical. You're just going over what you've been doing and just looking to refine some things. And once the technicals are down, I say it all the time, once you have the technicals down, the technicals are down. Everything else now becomes between the ears. Managing your motion, managing your greed, managing your fear. Managing your risk, so on and so forth. Okay, so keep that in mind. Do you trade iron condors, credit spreads? No, just naked calls and puts. Keep in mind, this is just for scalping, right? This is scalping, naked calls and puts. What's a killer is a slowdown. The slowdown is a killer. Now the ATR flashed above $1 and some change. Now it's back below 90, because this juncture here is really taking that, slowing the price down. Oh yeah, leave a review. I have to find a place to aggregate the reviews. What you can maybe do is I don't know if it'll allow you to do that. I think it can. If you want to leave a review and you're on Gumroad, okay, join the WAP in here and then leave a review in the WAP. So you don't need to join the Discord because you're already in the Discord. Okay, so maybe join the WAP in here, the free WAP, and then it should allow you to leave a review in there. Okay. Again, guys, those reviews help. Okay, those reviews help. And just leave an honest review, whether it's stars, whether it's a short comment, long comment. That's up to you. We finally got a shooter. See if this is it. If we can hold below 680.823. Maybe a slide. If you look at these candles, look at the anatomy of these candles. Okay, let's make a quick comparison here. We're at the 50-50. We're near that view up territory. Right. And look at this, right? Highly contested candles. I want you to see that. I want you to see it. Highly contested candles, meaning we're moving lower, but it's a struggle. Right? A lot of buyers, sellers on both sides, but overall the sellers win. And then we get a flush move here once we break that key level. Flush move to the upside, and then now we're reverting back to that tit for tat. So when it's like this, right, it's easy to overtrade. When it's like that, it's easy to get stopped out. It's easy to neglect taking profits. It's easy to extend your risk because it hasn't got to a level stop, but you might be beyond your risk from a percentage standpoint, right? So just understand that that's where we are. So we're not trading like we were trading for this 5, 10, 15, 20, 25, 30-minute sequence. This 30-minute sequence was clean. Before that, it was, again, we moved lower, but there was a lot of contention on both sides. Okay, now let's see if we cross that 50-50. If we cross this 50-50, we continue to push. Okay, that means, hey, you know what? We're starting to climb further into the the jaws of that gap. If we go shooter, if we start to show weakness here, then it turns into that 50-50, fall back below VWAP. So this is a critical point. So now you have to do your technical due diligence in this area for the next leg of the move. Does it collapse back to downside? Okay. Maybe bounce here. Or does it collapse all the way back to the lows of the day? Scenario 1. Scenario 2, it continues to push. Clear break, continuation. If you want those shallow pullbacks, right, flags off the waves on the 1. If you want those somewhat of healthier pullbacks, right, hammers off that 9 once the EMAs flip and that coincide with the key levels. So critical juncture. Okay, so new shift about in 3 minutes, guys. 3 minutes, new shift. Three minutes. Let's get the likes up. If we can get 100 likes, we'll do 2 giveaways. 2 giveaways. We're at 71 likes, 110 people in the chat. While you guys are in the chat, what's one thing you're looking to improve in March? One thing you did well in February. All right, one thing you did well in March. Nike, I'll take a look at Nike. One, two, three, four, five, six, seven. 7-day streak. Beautiful job. Okay. Are you talking about hold on. I think you're talking about this. And look at that management. Last week, beautiful management there. Beautiful risk management. Oh, this is Sancho, right? I think the Sancho. He posted it yesterday. I believe that's Sancho. Okay, giveaway time in a minute here. Names in the chat. I think I want to know where are they logging this. Your broker sometimes gives you the option to see the calendar, depending on the broker. Poppy. So it's what broker do you use? And there should be an option to do that. Sometimes you can change the colors. You can make it like orange and gray, but that's the broker. This is based on the broker. Packaging. I might not move right now. Okay, not get as much TP faster. I'll still have 1 or 2 contracts, so hard to leave runners. Okay, let me reread that. I'm still at 1 or 2 contracts, so hard to leave runners, and sometimes hold longer than I should. So if you're in that camp where you just have 1 or 2 contracts, right, don't concern yourself too much with the runners. So you might not be in the position to play the runner game. Just stack those wins. Stack those wins for now. The more wins you can get under your belt. If you can get to like 3, maybe 3 contracts, then you can start playing the runner game. Take 2 off, and then leave 1 on. Okay. But with 2, it's tough. Right, when you have just 2 contracts, because you can take profits at 15% on one of them, and say you let this one go, it goes to 20, goes to 30, and then for some reason it just drops back, it starts to fade, and it goes minus 10%. Right, that just basically eliminates that entire thing. It just neutralizes it. But if you can get to 3, okay, if you just keep taking profits with 2, if you get to 3 contracts, maybe you can start playing the runner game. All right. Maybe you can start doing, hey, you know what? I'll take 2, secure a majority with 2, and then let this 1 go. So at least if it comes back a little bit, these 2 already secure the profit. If you give back, say 10, 15, it's only taking a small percentage of a piece rather than 1 for 1. Right. So with the runners, right. I think that would be that can be a focus once you get to 3 contracts and beyond, or something where you can divide it up, and just build into that. Right, because with 2 is difficult. Even with 1 is very difficult. With 1, you don't want to get into the habit of trading that 1 contract as a lotto. That's the biggest danger. Just use that 1 contract, TP 10, 15. Just do that over and over and over and over again. And then eventually you'll be able to do 2. And then do that over and over again with 2. And eventually you'll be able to do 3. Then you unlocked the runner game. Or else with 1, it's just hit or miss. Win big, lose big. Win big, lose big. Win big, lose big. 1 step forward, 1 step back. 2 steps forward, 2 steps back. Man, bro, really need to help to keep doing the averaging down on losing options. Yeah, so with the averaging down, we discussed it yesterday, right? If it's not part of your plan, you're going to have to just get comfortable with cutting the position. You have to just get comfortable, used to taking those losses. Right? And it's tough. As human beings, we don't like to be wrong. I don't like to be wrong. Right? But over time, what you'll realize is if you fail to accept that you're wrong, all right, the market will make you realize that at some point in time. It will eventually break your ego. So it's okay. I'm wrong here. Let me just move along. I'm not going to try to force it. I'll look for something else. My mind's sincere. Right? I like that setup to the downside. Gave it 2 shots. My risk is at 687.80. Would I like to be right here? Absolutely. Do I like to get stopped out? Absolutely not. Just like anyone else. But I know if I refuse, okay, I can pay a price at 20 here or pay a price at 60 there. So if I'm going to be wrong, I don't want to be wrong for long, and I want to be wrong for the least amount. That makes sense, right? You are going to be wrong. Everyone's going to be wrong at some point in time. But when you're wrong, are you really, really, really wrong to the point where you give back everything? Or are you just wrong for a short period of time and it's a blip on the radar? Right? You see the difference? That's the main thing, right? So the averaging down, the underlying, I would say the underlying problem with that is just forcing it to take place unless your plan is to average down before that's part of the idea, to have multiple entry points. But if it's averaging down or averaging up, whatever the case may be, on the way, more than likely it's not part of the plan. More than likely it's just you're hitting the panic button, right? So those assessments you can make in your journal and find ways to improve it. And it'll take some time. And once you get past that, you'll see how much it will benefit you on, hey, you know what? If I'm wrong here, I'll look for something else. Okay, we're finally getting that break, finally getting that slow down here with some follow through back below VWAP, that 50-50. All right, this week, guys, it's truly been about patience. So you can see it comes into that 50-50, gives us the 5-minute candle, gives us the reversal combination. Right? So the bulls were able to get this, not to reverse the whole thing, right? Just enough to be a dead cat bounce. Just enough to be a dead cat bounce. But, okay, it is a dead cat bounce, yes. But now what the bulls can use is, hey, let the selling take place. They can use this dead cat bounce to possibly allow that sell-off to build this higher low. That's maybe their best bet. So there might be a cohort of bulls here waiting. And then if it just slices and dices through that, then this goes back to the floor. All right, so patience. You can see once it broke that 688.31, starting to slide. Beautiful. So you can see one of our team members, 2 contracts to play the runner's game. I keep it tight. Stop loss on the one thing that's running. It works for me 90% of the time. %. You can do a lot with a little with consistency. You can do a lot with a little with consistency. Right? What platform? Webull. For scalping, Webull. Again, if you don't have a Webull account, I do have a code available. Just let me know on YouTube. If you want to open up a Webull account, you get 4%. I think I get 4% as well. So it's a win-win. If you're looking to download TradingView or use TradingView, that's the primary software that I do use. I also have a code available for you. You say $15, I get $15. All right, so win-win. Those are the only 2 things I would recommend because those are the 2 things I use. So I'm not going to recommend something and try to get a code for something that I don't even use. All right, so TradingView is a staple in the industry. It's the go-to charting software that traders use. All right, so that's definitely something you want to add to your list. And you're going to have to spend some money. It's a business. You're going to have to spend some money in your business. You're going to have some tools. You don't need all the tools, but you need the basic tools. Charting, of course, brokers are for free, but you have to put your capital in. Right? Let's see if we get that continuation after that sell-off. Let me announce the winner. Thank you for the reminder. Okay, winner, winner, winner. So nice breakdown. So now let's see for us if we break these lows and we get that follow through. We get that follow through. Okay, follow through, follow through, follow through. Don't break those lows. No follow through. Okay, no follow through. Okay, let's do the giveaway winner here. Giveaway winner. Yeah, this week the thing this week is just patience, to be honest. Right? It was more. Of course, every week is a test of your ability to manage risk and take profit. That's not going anywhere. But some weeks, right, it tests other things more. And this week has been patience, I would have to say. Because we're seeing our setups, or I'm seeing the setups, right? And then the 50-50, you have to be patient for the 50-50. If you don't have the patience to wait and you are in a trade, manage the risk. Don't let one idea roll over into another idea. Okay, giveaway time, guys. Any winners? Any names, I should say? Any names? I believe I got you. What's your name? Just put your name, guys. Put your name. So if you put your name, I can put it. Do I have? I got Gabriel. I think I got Gabriel. Unless it's a different Gabriel. So I got Gabriel already. If you see your name in here, someone has your name, just give me the last initial or number. Okay. So giveaway, giveaway, giveaway. Let's do it. SPX. So I got SPX here. I learned a hard lesson about not having a stop loss set in the trade, and it really hurt 100%. Stop risk management, especially taking those when you put all those pieces together, there's so many components. You start being good at trading. Anyone take that 50-50? Anyone who's patient enough? I think most of you are done for the day. Rakesh. Maddie, Lorraine, Harry, Miso. Okay. Any other last entries? Okay. 80 likes, we'll do another giveaway, guys. Well, we need to hit that 100 likes. We need to hit that 100 like mark by 12 o'clock. It's already 12 o'clock. Time is flying. Okay, look at that. You see that dead cat bounce, but going into that reversal, all right? Like we said earlier, this reversal is not, you're not anticipating the reversal of the entire move. You're taking it piece by piece, right? It's going to start to slow down up here, the 50-50. And then now we're putting some pressure back on. There's a natural push to the downside. We get above VWAP. We get above the 50-50. We peekaboo. Start to slice to the downside. Now the VIX where was that at that time? 19. Starting to push. 19.59. Okay. Make sure to like. Do we got Beck? We got Bev. Okay, we got Beck. Okay, let me put Beck. Anyone else? Beck, okay. All right, giveaway time, guys. Giveaway time. We're starting to see the Qs dump, SPY dump, IWM dump. Back to the downside we go. Back to the downside we go. All right. First winner of the day. First winner of the day is BG. Congrats, BG. Send me a DM in the free tier Discord. Send me a DM in WAP, either one. A code word for today is back. BACK. Okay, congrats, BG. So we'll do another giveaway. Look at that, guys. See? Impatient trader versus patient trader, even down here, to access this runway. All right, fuel off of that 50-50. The VIX going north. All the index is selling off. Okay. Okay. So the training, guys, the boot camp is available 10 a.m. Eastern. Okay, I'll send you a Google Meets link. I'll add you to the list via email. Right? So impatient. I was a little impatient there. But doesn't mean my entries there, this does not meet the criteria. I cannot have a stop this wide, guys. I can't have a $2 stop and have a $1 and some change TP. What I'm looking for is with this. So in this case, wait. There. Trail on the way down. Okay. So even on my end, there's a lot of cleaning up I need to do over the weekend. My patience. Execution. A couple of executions could have been better. All right, because going into March, guys, you don't want to go into March beat up. Okay, you don't want to go into March used and abused and mentally drained and just spinning. You want to make sure you're going into March with the right mentality. We can't get a bounce off of this 50-50-50. Okay, so you can see this area. We can see some buyers step in this territory. See if it's sufficient. If it's insufficient, we continue to push. If it's sufficient, that higher low gets printed. Makes sense? Like we were saying earlier. So even if you feel like, hey, you know what, you need a couple of days off to kick off March, take it, guys. Take it, guys. I know I'm trading every day. The lives are every day, and it seems like there's no stop, right? But you don't have to try to keep up with the train. Go at your pace. Okay, go at your pace. TP and the stop loss and risk management is something I need to work on. Absolutely. Make those notes in your journals, guys. Get yourself a journal. Right. If you're looking for a journal, I do have journals in our merch store. All right. Very simple journal. See profit, take profit, process over profit journals. So this is a great emotional journal to see the things you're going to improve day to day. All right, you can write it down or get a journal from the dollar store, or whatever it is. Something to track the things you're doing. All right, not automatically. Those journals are good as well. Those quantitative number journals are good as well, systematic, but you need one that captures the things you're going through between the ears, the things you're feeling, the things you might be, maybe you're at a wall, right? You're not going to see that on your P&L. P&L is a number, right? Sometimes you can be green on the week, but you're still not operating at your full potential. Sometimes you can be red on the week, right? But you're sharp. It's just the odds are not working in your favor. So you see how deceiving it is. So your performance is, of course, what matters is the P&L at the end of the week, at the end of the month, at the end of the year. But you also want to know what the internals are within yourself. Because the internals will foreshadow what's coming. If you feel burnt out and say you're able to squeeze out a green week, if you feel burnt out, exhausted, mentally drained, you feel like you're spinning but you're still green that week, your P&L will say thumbs up. But if you just do a short forecast, it's almost like you're a doji candle. You're about to go the other way. And the only way you can track that is by writing it down, right? Not typing it out. Typing it out, that's good, but there's a disconnect. There's a disconnect, right? Because when you're writing, it's direct. It's from you're connected to the paper, essentially. So you can really write down the things you feel, really write down the things that are allowing you to get to the next level, some of the things that are roadblocks. And we all have personal lives, of course, outside of trading as well. So those things can start seeping into your trading as well. It can add additional pressure. So being a trader, there's so much components to it. All right? It's almost like you're a high performance athlete. But just you're a mental athlete. Okay? TP and stop loss, risk management, something I need to work on. Yeah, there's a way you can set that up on Webull as well. Nice retrace, reject out that level. No, VIX cannot go to zero, is what I said earlier, right? VIX, I don't think the VIX has ever gotten to zero. Because if the VIX is at zero, that means there is absolutely zero fear, right? So whenever VIX does get to some areas where it's very, very low, like it did today, it starts to just bounce. You just have to know what that threshold is, right? Usually like 15, 16, 17, eventually that bounce is coming. And VIX can, let's say this, VIX can go higher, then it can go lower. There's no limit to how high the VIX can go. Okay? It just depends on how much fear there is in the market. So from a technical standpoint, there is no limit. Right? Are there all-time highs and boundaries? Absolutely, right? If we take a look at COVID, there's anomalies. There's of course 2008. So you can say, hey, you know what? That's where we were. But there's nothing saying the VIX can't get above 90, 98, 40. Right? So that the catalyst, or there has to be that much fear to drive it there. But the VIX has never gone to zero. So it's like this. There's never going to be a time where there's absolutely zero fear. So it's always going to exist. Fear is always going to exist, but different levels of fear exist. That makes sense from a bigger picture. Right? So that reclaim of that 18 push was nice. That retrace reject, that breakdown or retrace reject, these are the kind of setups, textbook setups. Let it break, retrace reject, combo, take that slide. Right? Here, no retrace reject, no break. Okay? Now 50-50 is collapsing. We haven't caught a 50-50 in quite some time. So the 50-50s, when they start to go, they can start to really go. They don't happen every day, but when they start to go, they can start to really go. The 5-minute reversal signal was 688.31. So this is not even the 5-minute revert. This is a retrace reject off of this drop. Okay. Again, if you're looking to join the community, guys, there's 5 spots left on the trial. 5 spots left. March, there will only be 10 spots on trial. All right. Okay, you can send me a DM, BG. I saw your DM. I'll send you the link to the bootcamp via. Just send me your email in there. I'll compile a list of all the people going to the bootcamp, and I'll send out the Google Meets, and then I'll add you to the Google Classroom, and then you'll have access to all the stuff there. Okay. An option seems more difficult, something to look into. Okay, this continues to drop, guys. Continues to sell off. So nice dead cat bounce. All right, this is a dead cat bounce. Even though it's a dead cat bounce, you can trade the dead cat bounce and still have an opportunity to squeeze something out of it. You let it bounce, you let it come back in, and now, of course, the most important lows become the lows down here, 684.35. $684.35. So now the ATR has fallen off a cliff. Okay, so the conditions are not. These conditions here, second, third shift, a little cleaner, but the closer we get to 12 o'clock, the closer we get to midday, the more choppy it becomes. Optimally, what we've been seeing, especially most of February, is the best action is in first shift. So now we have the data for February, guys. So now going to March, the first week of March, we're getting our reads. What happened in February, right? It doesn't have to happen in March. It's every time. It's like a different movement, different cycle, right? New seasonality, new catalyst. But what's the same? Our risk management is the same. Our TP is the same. Our levels are derived from the same things. Market is changing, conditions are changing, but those things remain the same. So now we'll start to see, hey, how do we interact with those levels in March? How do we interact with opening levels? Because certain weeks, certain months, there's a tendency for the market to gravitate towards certain levels and have certain reactions. And that changes week to week, month to month. Oh, 5 minutes. Set the ATR to 5 minutes. Because I just want to know, I want to get a feel for the duration of the time I'm going to trade. More than likely, when I'm going to trade 3 to 5 minutes with the majority of my position. So I want to get a good feel for that. Thank you for getting Refill My Coffee, Pan-Africanpreneur. Again, if you guys feel compelled to support the channel, there's multiple ways to do it. You get access to some videos, 50 plus videos, strategy, psychology, and you have access to all the past streams. All right, that comes with your membership. So we are still a small channel, guys. We're still growing. We took a tremendous leap this week with your support. You guys are smashing the like button. Hopefully you guys are finding value from the content. We go live every single day at 9:30 a.m. Eastern. 13 likes away, guys. Let's get 100 likes. 100 likes. Not sure if we can take it to the close today. I do got to say, extending the stream does put some mileage on your brain. It does put some mileage on your brain. Futures. 100% prayers for Carla. All right, this is your go-to channel, guys. Go-to channel. You see the wins, the losses, the strategy, everything's walked through. And this is how it's going to be soon, guys. The landscape is going to change. The landscape is going to change. It's going to come to the point where viewers are going to want people to go live. Right? Because people tend to learn better that way. People turn to learn better that way. And people want to see how you are responding to losses, how you're managing your position. Everyone does it differently. We'll take a look at the some of the ideas from this morning. I posted the ideas from this morning. All right, so I do post ideas, all right, for you to do your due diligence on. All right, so JPM was day 2 continuation, UPS day 2 continuation, Palantir day 2 continuation, Starbucks day 2 continuation if there's something there, Walmart potential push to the downside, push to the upside off that consolidation candle. Nike, right? We can see can break either way. Symmetrical formation. QCOM. So all this was sent out. Lyft. Let's see if Lyft lifted off, and of course Disney. So all those names. Let's go review those names. Now we will do a giveaway here, guys, in just a bit. So stay tuned. 100 likes is the threshold. Let's open this up. What is it called? Yeah, there we go. Okay. All right. Chart don't lie. How do those ideas go? So the time I gravitate towards those ideas, right, is, of course, when I see an opportunity that's greater on those names than SPY. Appreciate for refill my coffee, Brad. Now, speaking of coffee refill, I might have to get one here shortly. Okay. All right, so some of the ideas. Snapchat, day 2 continuation. Okay, the initial idea came in here. Off that break, today's day 2 continuation. Snapchat continues to go. UPS did break down yesterday, did break above that 115.75, peaked above it slightly, starting to wick back the downside. So potential scalp or stop out on UPS off that day 2. Actually, no day 2 continuation on UPS. It just went the other way. So day 2 continuation would mean that it breaks these lows here. It was double inside, breaks those lows, continues. So no trigger here on UPS. Of course, this came in yesterday, that double inside break. Google, no day 2 continuation, no break of that 313.69. JPM, nice day 2 continuation on JPM, went from 303.72 territory all the way to 308. So some traders can take profit off of that. That's a $3-4 take profit opportunity. Some can hold it to see if it continues to go. So it just depends. But of course, that did play out nicely intraday. And the question becomes, can JPM end the day, okay, reestablish control over that daily open and try to close above this resistance for that breakout? If it can't, that can be resistance. It can go shooter back the other way. Next name was Palantir for day 2 continuation. So day 2 continuation just simply means after a reversal, right? This was the reversal signal. Okay, yesterday, that was the idea of Palantir. After this, does it continue? Same thing with Palantir. Very similar story with JPM. It peaks above it, scalpable, and then it starts to retract. So now, can Palantir reestablish control above that 136.10? Next thing was SoFi. SoFi was for that retest in this area. SoFi is inside. The idea for SoFi came in off this inside candle. SoFi was also an idea here as well. That was between 1892, 1872. Okay. Starbucks. Day 2 continuation on Starbucks. Okay. Got some follow through. Starting to give back. Starting to push to the downside. So Starbucks, great opportunity there. So all JPM, Palantir, and Starbucks, if you're a trader who's trained to take profit, you have something to show for it. If you're just in profit, up 30, up 40%, 15%, whatever it is, and you're not trained to take profit, right, then you just give back what you had. Nike. Same thing with Nike. Nike double inside break. Gets above 64.20 and gets into 65.64, starts to fade. Very similar story there. Double inside break. Big question for Nike is, can it close above 64.20? Lift was another name. Lift for the reversal. Okay, lifts off. Comes into support, reversal above 13.58. QCOM. Okay, same thing with QCOM. Nice reversal, peaks above that 146.03, gets to 146.94. About a 91 cent move to the upside. TP opportunity available, start to recoil. Disney couldn't get a hold of that 106.69. Maybe if you take Disney, stopped out. This Disney's still brewing. So let's see if Disney can get a nice break. And last but not least, WMT. Walmart. Walmart was the name to the downside, breaks above it, reversal on Walmart below 125.39. Walmart is at 124. Got as low as 124.23. Okay? So majority of all those ideas played out. So when I send it out, it's on you to do your due diligence. All right? And we talked about how we liked Walmart and Lyft. All right, a couple of those names. All right, so do your due diligence. If I see those ideas, it doesn't take much for me to share it. My primary focus is SPY. Right, but if SPY is not doing anything, I'll go to these plan Bs. Okay, so thoroughly review it. I'll try to post it the night before to give you some time, like a little homework assignment. See if you can find some opportunity there. All right, because the whole point is, guys, for you not to get spoon-fed ideas. For you not to get spoon-fed signals or alerts. Is for you to train yourself to use the tools to learn how to fish. Right? So to find those opportunities. Because when you start doing that, right, lots of things change. Now you can bring ideas to the table as well. All right, the whole point is I want our community to be filled with people who want to learn how to fish and become fishers, become fishermen, or fisher women, because we have a lot of women in our chat as well. We're doing exceptional. Okay, so fishers, that's the whole point. So the ones who want to learn how to fish, you come in. You immerse yourself with the resources. You collaborate with people, the Q&A, chart request, Sunday night prep, whatever resource I can provide to help your learning. And then eventually you become a fisher. So now the community has a bunch of more than capable fishers who are exchanging ideas. Right, that's the ultimate goal. Right, that's the ultimate goal. Okay, so you can help someone in the community, you can help someone else, and you continues to get better. We have a lot of great traders in our community, guys. Tremendous traders in there. all kinds of traders. Right? So that's the whole objective. So a lot of those did present an opportunity. Risk management automatically starts because, okay, I think having a channel makes one more disciplined. Yeah, it does, right? You have to be live. We've been going live for more than, if you're just jumping in, we just didn't emerge. We've been doing this for more than 200 plus episodes, very similar to this. From April of 2025 till today. Maybe we missed one or 2 days of trading. All right, maybe 1 or 2. 2025 so far, we're able to get all those days in. So we're about to hit our 40-day mark. Right? So again, it requires that stamina. It requires that mental stamina. You have to be doing those things in between the weekends. Most of you have that full-time position as well. So you have a 40, 50-hour workload on top of that. On top of that, maybe you have kids, you have family. So now that takes some of your computing power. On top of that, you add trading to it. All right, so your CPU can be overutilized. So you have to learn. You can't get a new CPU, okay? You can't get a new brain. You can't just start a new life, but you have to learn how to move things around. And when your CPU is being overutilized, know, hey, you know what? It might not be my best interest to be clicking buttons. And it happens. Sometimes you take things that happen, you internalize things in the personal and you bring it to the professional. It's not intentional. We're human beings. But that's why you have those risk management things in place. That's why you have the journal in place. So you can catch yourself if you do feel like you're doing that. Right? Now we're just chopping between these two areas, guys. Chopping between these two areas. Looks like we got this low. So we have infancy of this push to the upside. The most significant high is up here. So does this low lead to a higher high? Or does this low break down and we get another lower low? And this area becomes the lower high. So pivotal point here. 5. I set it to 5, Boomer. You got so much info packed in each day. Plus, this is a training style that works best for me. Yeah, each episode, we don't know which way it can go, right? Of course, I take the trades. Q&As come up, so there's lots of directions each episode can go. There's lessons in there. There's stories, analogies. We have a ton of fun, guys. And I do appreciate you guys showing up, you guys being receptive. I learn every day as well, just as much as you guys are learning. I try to get better just like everyone else as well every day. So at 9 EMA, nice rejection. At 5 is starting to turn into a shooter. Went 3 down. We're stuck between those levels, right? Stuck between those levels. Let's see what happens. Let's see what happens in this area. Again, guys, 100 likes, 12:30. We'll do another giveaway. See if we can smash 137 likes. Yesterday, I did have the NVIDIA earnings. For some reason, the earnings call audio wasn't translating to the stream. All right, it wasn't translating to the stream. Not sure why, but So the stream had to get cut off. Speaking of NVIDIA. Okay, we'll do some chart requests. NVIDIA. Okay, NVIDIA. Look at NVIDIA. Is this the moment where we look back in time and say, NVIDIA, all right, I still have not come to that conclusion. Is NVIDIA the new Cisco? Right? When we had the internet, of course, the web revolution during the dot-com bubble, right? Cisco, you would think Cisco would be trading at $1,000. It's a key name. Anything related to internet, anything related to infrastructure, anything related to routing, anything related to translating data from one point to the next. Cisco's involved. They're the biggest player. So when you think of that picks and shovel analogy, right, when there's a gold rush, during .com, Cisco was the picks and shovels. But Cisco has not been going anywhere fast for a long time. I mean, it's starting to pick up now. So is NVIDIA the picks and shovel of AI becoming this era of Cisco? Still early to determine if that's going to take place. But we'll see. We shall see. So who thinks NVIDIA's going down that Cisco path? Okay, let me show you Cisco, if you're not familiar. Of course, all my people in the field of IT and computers are very familiar with Cisco. Let's go to the 12-year, the 12-month. Okay. Cisco just made an all-time high after how long? Okay, so no, SCCO. There we go. Okay. Here's Cisco. All right. So Cisco IPO 1990. Okay. IPO 1990 hit its peak in 2000. Of course, .com, that had tremendous impact on Cisco, but the company Cisco did not disappear during .com. Cisco is the back and bone of the internet, the backbone of the internet. Okay, when you think of switches, when you think of routers, when you think of all that stuff, the Cisco technology is the back-end infrastructure. Right, whether you like it or not. But after the .com, the S&P recovered. Right, we can all agree. We're not at nowhere near the .com lows on the S&P. Cisco went on this long stretch where it wasn't doing anything. All right. So after .com, it took it how long to recover? It just recovered this year. Okay, let's put that into perspective. After .com, since 2000, since basically January 2000, 26 years ago, Cisco just recovered right, the .com blow. But as far as the company being operational, did Cisco go bankrupt? Did they lose business? They're still a key player. Okay, but the Cisco is one of the most important names when you think of the internet. Has been and will be until further notice. Until there's a new company that comes around. Okay, Arista doesn't have the capability yet. There aren't too many players in that space. Okay, they're the standard. Cisco routers and Cisco switches are the standard. All right, so now is NVIDIA, again, this is the picks and shovels of the gold rush, the internet rush, and of course that's Cisco. So does NVIDIA take a similar path? Of course, it's still early to call it. We see NVIDIA's massive path, right? So when people call for the AI bubble, okay, let's translate that to Cisco. All right. .com bubble. So this is where NVIDIA is. Again, this is an extreme case scenario, but it's just a thought exercise. All right. Just a thought exercise. So NVIDIA, not to translate directly to what Cisco is doing on the chart, but from the standpoint of, is the volatility, the movement, those days of NVIDIA starting to fade? And that we're seeing those names, we're seeing that volatility and movement kind of be dispersed with some other names in that sector. Okay, so that's just a mental thought exercise. By no means am I saying that NVIDIA is going to collapse and turn to Cisco, all right? But I'm saying very, very similar trajectory. If NVIDIA continues to trade like this, it's still early for the next few years. Because from a fundamental standpoint, NVIDIA is now one of the cheapest chip names. And no one's picking it up. Okay, so we'll see how that unfolds. That's the cool thing. We shall see how it unfolds. Does anyone work with Cisco equipment? Corrections always recur when retail traders are doing record buys while the institutions are top sellers. JP Morgan's data shows retail investors poured $48 billion into equities in February 2026. $48 billion. It's very interesting, John. That's an interesting stat. So nothing much going on here, guys. We're just chopping between those two zones, between that weekly open and the yearly open. So this is the yearly open, the weekly open. So we're below the weekly open. So we basically neutralized. Remember the game we were talking about on Monday? So let's go back to the game analogy. All right. Game 1, 5-game series. Bears take the W. Game 2, Bulls tie the game. Tied the series, but they're ahead in point differential. So, in our terminology, we're green on the week. Game 3, Bulls use that momentum to continue to build on their lead. Translation, gap up. Game 4, okay, Bears take back the lead. Take back now. Currently we're here, and they're about to take over. Now they're currently ahead on the point differential. All right. So now this game is currently going on right now today. So this is the sequence: 5-game series every single week between the Bulls and Bears. This is where we are. So by the end of the day, if we continue to stray away or get far away from that weekly open, 687.80. Then that means, right, the Bears have taken the lead. The series is tied 2-2. Bears have taken the lead, and they're ahead on the point differential. So going into tomorrow, do they continue to add on to that lead? All right, and win the series? Or do the Bulls come in tomorrow and take back that lead and win the series for the week? So it's still up for grabs right now. All right, so that's it. From a sports analogy, that's where we are. So now you can picture it a little more clearer than just level on the chart. So what are your thoughts? Do you think by the end of the week, do the team Bears, okay, win the series 3-2 for this week? All right, 3 wins, 2 losses. Or do the team Bulls win the series? So if the team Bulls want to win the series, if they get above that weekly open, they'll be up on the point differential for the day. So today is still up for grabs. The game is being played today. It's live. All right, it's still like the first. We just got into the second half. Okay? During the first half, the Bears are in the lead. Okay? Bulls take a timeout. All right, and they tried to, out of the timeout, they run a play. Okay? Score a bunch of points. And the Bears counter. That's where we are now. That's the kind of week it's been. So when you take this in totality, of course, we don't have that last piece of data. The last piece of data, meaning that last day. But as of now, if we take a snapshot of the week, okay, as of now, we can see, okay, this is a very tight, close game. Okay? Close game equals bigger picture equals chop. Close game equals chop. Blowout equals expansion. So this is by no means a blowout. Intraday, okay, we can see points being scored in both ways. The game is moving fast. But by the end of the game, this is where we are. Okay? End of the game, that's where we are. So very interesting to see how we close out the day. Do we close out above that 680, 780, or close below it? When we zoom out to the yearly. Okay, now let's think of the 12 game series known as the yearly time frame, which is composed of those 12 monthly candles. So that 12 game series, the first game, which is January, Bulls won. Second game, okay, Bears are about to take the lead. That yearly open. If they take the lead by the end of the month, by tomorrow, then that means point differential, right? The Bears take the lead, and it becomes 1-1 on the month. Okay. So very, very interesting to see how that dynamic plays out. Very interesting. So if you did join the boot camp, guys, you will have access to it. All right, I will send you the link manually. It's going to be done through Google Meets. I look forward to work with everyone, guys, with this class. Okay. You should have access now. All right, just chopping in that territory. New shift. New shift. So we keep getting tighter and tighter and tighter. All right, so tighter and tighter and tighter. Descending triangle on the 5. Let's take a look at it. Let's take a look at it. Okay. That's the one you're looking at? Or the smaller one within that? Smaller one? Okay. Let me erase the drawings here. I'm going to take this with me. I like this 50-50. That gives us the good read. So anytime you're trying to catch a reversal of the whole move, first things first, at 50-50. Simple and plain. All right. Even if you catch the reversal off the bottom, maybe you can target somewhere near the 50-50, EMAs, levels. So the smaller one is this one here. Yeah, I can see that. Something like that, Boomer. No, not be mad since her brother forgot her. Yeah, good eye. All right, so now the question is, can it drive into that 687.24 and beyond? All right, we do have that 20 MA right there. Great eye. Let's take a listen to our friends at CNBC. I'm going to go refill my coffee. Let's see what they have to say. See what they got to say. Okay.
Of this rapidly changing world, which is something that people got into the software industry because it was so predictable.
Okay, be right back, guys.
And because they were so comfortable with it.
You guys both own it. In fact, Malcolm, you just bought more.
Mm-hmm. So I bought more yesterday, actually. Okay. So I sold out of one company that has its roots in private credit and instead bought more Carlyle because, to Leslie's point, it's the least dirty sock in the hamper, if you will, when it comes to that. So getting rid of Blackstone made sense to me. Adding to Carlyle made sense to me. The reason I want exposure to this space is because of, to your point, the annually recurring revenues that Carlyle brags about, right? Their distributable earnings are obvious. It's easy to predict, and so it's a great space to be in. I just don't necessarily want all of the exposure to building out the AI data center.
So you went from an actor in the space that had 7% exposure to one that had 6%.
So Blackstone, I am concerned, has a little bit more exposure than we can actually see because of how many of those loans we don't have the data on. Carlyle, to me, looks like a much cleaner picture.
Do you mean the GP stakes?
Yes.
The fact that they're
Yes.
invested, whereas Carlyle's not invested in other private equity companies.
So I mean, you had the week in which you had Boaz Weinstein. We talked about this, right? The wheels coming off in private credit is what he said down at iConnections in Miami. You've been defending this space.
And still will. There's no question that there is episodic issues in this space, whether that be the energy credit scare in 2016, which frankly was massively overblown. The exposures weren't as big as everyone thought, but the spreads widened out. Realize that underneath every one of these transactions, there's equity. So you're worried about the credit, instead of the equity. If the business is performing, I am telling you, the equity is stepping in to save that investment.
I don't think that's what people are worried about. People are
so what are they worried about?
They're worried about future fundraising and therefore revenue, because the investment.
But doesn't that impact the equity more, Josh?
Let me finish. The thing that people are worried about is the growth plan was we're going to tap America's 401ks and we're going to go through the wealth management channel and insurance, et cetera, et cetera. And they've made some inroads. But the big idea was that institutions are fully invested in these asset classes. We need the next group to come in. We're going to double our share of the U.S. investable asset. The problem with that story is if there is a credit hiccup, right at the moment that the American public is being introduced to these strategies and they see some blow up, some pain, that's going to push that story out further or cancel it entirely, especially if you think Lloyd Blankfein is right and the government looks at this and says, you know what, actually, let's pump the brakes. Not a great idea.
That last part's the most valid point you made there, but I have always found in doing this for a long time, and I'm sure you have too, there's two things that really drive returns in markets. Number one is riding momentum that's positive. If you can ride it longer, you're going to do really, really well. Mag 7, whatever it is. The other is steering into disruption when it gets crazy. And right now, the public BDCs are discounting dramatic fail, not just 3-5% defaults, dramatic defaults in their pricing. Okay, and if you can go in and do the work, you can earn higher forward returns when you stare in at the point of.
Would you buy the BDCs or the sponsors right now?
I have
fresh.
But
fresh cash. Which would you buy?
If I was doing a trade for profitability, I'd go to the BDCs. If I was working with somebody,
you would be one of the few.
You would buy OBDC before you bought Blue Owl equity.
So Blue, we own more of the other, but yes, as a trade, I would do that because I think it's been over. I think it's been massively overdone. You look at KKR with 22% yield. You know, you can go to Ares and get a 9% yield because their portfolio is viewed as maybe a little more safe.
Are you defending it the way you are because you're putting your clients into private credit? More so than you ever have?
Not more so than I ever have. It's been a consistent story for us. And by the way, most of these portfolios, we dive in, we do a lot of work, we understand the credits that are in them, and I know there's different credits in the public BDCs versus the private BDCs. They're different liquidity profiles. But at the end of the day, if you do your underwriting, we can't be fear-mongering this. They have a ton of equity beneath each one of these loans. It's a ton. It would have to be hugely disruptive. I will continue to defend and take the heat.
Isn't what's happening in software hugely disruptive?
It's expected.
What meets the moment of hugely disruptive?
It's expected
What's
to
the
be.
definition of that?
So tell me why, when you look at Indeed, they're 11% up in the software engineers that they are hiring, and at the SaaS businesses. Why is that happening? Is it because they're unhealthy, Scott? That doesn't make any sense yet. Yes, there's possible disruption coming. And by the way, most of these loans are short duration loans. You're worried about the credit? These are not long loans. Private credit are not long loans. They're not. So
they still need to be marked somewhere.
They do, and you could question. Well,
no, you can't question.
Hold on. You could say that maybe there's some more defaults in there, but is it discounting a 22% discount to NAV? I think at some point you have to say the juice is worth the squeeze. Malcolm's saying it's not. I'm saying it could be for a little bit.
Until the juice gets sour.
Okay, well, I've told you, my success in investing has come from two things. Riding that wave, and also when disruption happens, trying to steer into it.
We're so over time. My gosh. I'm sorry, Katie. Do you want to just wrap it up real quick? You deserve a last word.
Oh, no, I was just going to say it's the trustworthiness of these marks that I think is the next thing that will be in focus.
Yeah.
The fact that you can do the work on the BDCs, but we've seen countless examples of loans that were made that were valued at par essentially a month before and then zero the next month. So there's some concern about the trustworthiness of what you are seeing after you do the work.
All right. Thanks, Leslie. Christina Partsinevelos has the headlines for us. Hi.
Hi. Well, former Secretary of State Hillary Clinton says She has no information on the late sex offender Jeffrey Epstein's criminal activities and never recalls actually meeting him. She shared the text of her opening statement to the House Oversight Committee today before the panel's closed-door deposition got underway just this morning. Clinton also called on the committee to ask President Trump under oath about his connections to Epstein. A Texas judge rejected a bid from Tylenol maker Kenvue to throw out a lawsuit accusing the company of concealing the risk of autism to pregnant mothers. Texas Attorney General filed the suit back in October, about a month after President Trump publicly claimed there was a link, despite...
Okay, back. Coffee's refueled. We're right at that yearly open. Nice structural break there. Let's get caught up in the chat. Okay, smaller one. Thought descending triangle is bearish. So the reason why the descending triangle is bearish, it's bearish when that support is violated. Of course, if that breakout takes place, then it can be off the table. But the reason why, just from a simple standpoint, is because just think of it like this, right? Coming into this triangle, right, we have downward resistance, relatively horizontal support, right? So that means buyers are willing to pick it up off these levels, right? Support means buyers were here previously, comes back into it, they pick it up. But one thing we're noticing about this formation is every time the buyers step in, right, they can only drive price lower than before. So in the event that they can't get that breakout, right, get that breakout and this support gets violated, and we get that close below that support, right, because now it's telling us that less of the buyers are stepping in, but they have less and less force. And then now it gets too heavy. That resistance basically is too heavy on that support. If that makes sense. That makes sense. Okay. So that's why. So in this case, the validation marker would be, on that last straw, we don't get that close below it, and then this eventually turns into a clean break and continue to push higher. Right. But if it continues to unfold this way, that break is going to be critical. That makes sense. That's a great question that you do bring up. 686 puts. Okay, good. Caught that. 56% TP. Beautiful job, Milton. One trade. Beautiful. Trader 1, absolutely. Well, maybe start using those profiles, right? Trader 1 type trade, Trader 2 type trade, right? Associate those personalities. Beautiful job, Sancho. Look at that, guys. Right? Full-time student as well. Let me put it on YouTube. Just definitely deserves some recognition. So one of our traders, full-time student. Again, he didn't start yesterday. He's been at it for some time. Went through the process, made adjustments, stayed persistent, adapted, and look at that. All right. Has his strategy. He takes further. So he doesn't trade those zeros. He goes 1 to 3 days out. Okay. Mixes in some swings in there. Right. So tremendous job, Sancho. And I would have loved to be a student, right, and be a trader. I think that is the best. If you're a student and a trader, right, you have basically nothing to lose. So it can make you reckless, of course, but from the standpoint of if you learn those lessons and you're really serious about trading and you're a student, right, there's no reason to work part-time. Like full-time student, you can just trade and just figure it out. Okay, defend my green January, February placed. I can't break, I only trade. Order out the money in the money. Anything further is too much risk. 0 DTE. is not my main source. There you go. Beautiful job. So now going to March, objective is, right, don't give back February. Build a base March, first couple of weeks. And then you close out on that. So as of now, if you just don't trade for the rest of March, you have a green quarter. Right, but of course, March, the opportunity is going to be there. But tremendous job. One day at a time, one shift at a time, one day at a time, 1 week at a time, the zero DTEs are great for those scalps, right? So everyone might not be primed for those zeros, right? And they have to start going. If your personality is more, hey, you know what? I like to let it develop and play out. Not meaning, hey, you know what? You're going to have an 80% risk, right? To some extent, manage risk, but give it a little more time to develop and play out. Maybe you don't have the luxury. Let's put it this way. Say you're full-time, you work full-time. Okay, you work full-time. You don't have the luxury of sitting behind the screen and clicking the buttons, right? Because you just have these pockets of time. The zero DTEs, they're gonna be for scalping, because you're gonna have to manage them as it goes. You might sit through a little bit of back and forth. But I don't usually recommend this unless you know what you're doing. Say your risk, say you can't babysit the contract. Say your risk is $500 per trade. All right, let's just say that. Or say $100 per trade. Okay? You have $1,000 on the position. All right, just for an example. And say your risk is $100 to $150. So 10 to 15%. Okay? Your risk is 10 to 15%. So your risk is anywhere from 100. So you're taking this $1,000, you're putting it in a position, and then you're risking 100 to $150. 150%, $150. Okay, that's the scenario. This is the traditional scenario. Okay, very, very common scenario. That's the common scenario. That's your risk. So one can say, since I'm passively watching, if I'm risking this 150 anyways, why don't I deploy the 150? Okay? And my risk be the whole thing. Does that make sense? Let me know if that makes sense, guys. Right? So $1,000. But these are two different things. So this is only if you know exactly what you understand this. So say you get your setup, you get that breakdown, whatever it is. You're risking 150. 100 to 150. Okay, that's your risk. That's that when you allocate when you define or allocate your risk. You're okay with parting with this. You're not okay with parting with this. This would be considered a wipeout. Okay, this would be considered a stop out. You see the difference? This is a wipeout means you lose everything you put in. Stop out means you lose the defined amount you signed up to risk. So in this camp, of course, you're using 10 to 15%. In this camp, say you can't babysit it the whole time, but you're willing to lose 150. In this case, you're saying, hey, let me use this 150, buy contracts at a 150, and risk 100% to make greater than 100%. Or whatever your percentage is, if that makes sense. So that means with this 150, Okay, this 150 either goes to 0, right? Or this 150 either goes to 200 to 300. Okay, so either 100% loss will be, this is basically what a lotto is. That's basically how a lotto, sizing 0 lotto works. All right, but you understand this strategy is not going to get you to where you need to get to long term. This can be something you can incorporate, be a feature, because I would avoid deploying more than what you're willing to lose into this kind of trade. The mistake traders make is, hey, they have that 1,000, they can lose that, but they do this. They take that 1,000 and they put the 1,000 here instead of what they're willing to lose. So this might be a way to approach it, to where small position, very small position, make or break. Right? Which is, in this case, you are babysitting the position. All right? And you can navigate and you have the luxury to take those trades because you're watching it unfold. So you see the difference? So this is one way you can strategically use very little, right? Win big or lose big. But you have to understand with this, the low win rate is very low. You have to understand with this, you cannot be beyond your traditional risk. So you can make this a feature. You can say, hey, you know what? Okay. 80% of the time, or it says 85% of the time. 85% of the trades I take are in this category. And then 15% are in this category. So 85 in this category, 15% in that category, making the whole 100. So you can have your bread and butter. Because I would not recommend doing this. I would not recommend doing this with a full size. And then that goes down, and a lot of the habits. So what are the downfalls? A lot of the habits you pick up here translate to your regular trading. A lot of the tendencies you pick up here translate to here. So you need to make sure these exist in two different areas. These are two different business models. Two different business models. Right? So that can be a way. I know a doctor, one of our traders, works full time. He does something similar to this, but has his own spin, but structurally similar to this, and finds success in some areas and does the rest this way. But you have to be able to draw that fine line. Very similar to Trader 1 and Trader 2. Very similar to Trader 1 and Trader 2. Okay? But again, when you start operating in this area, you start getting into the lotto, you start getting into the win big, lose big mentality, and it starts to trickle into your primary way. Long term, if you're looking for long-term sustained success and scalability, this is the approach you want to take. You just adjust the risk. You just adjust how much you're risking, what percentage of your account you're using, what percentage of that you're willing to lose. The textbook way. Okay. But a lot of traders in our space, a lot of traders in the trading space deploy that lotto strategy. because you're not really in that case you're not really using the chart. If your stop is 100%, you're not really using the chart. You're more than likely just trading a contract. Okay. Monday, Wednesday, 2 DTs, Thursday, 1 DT, Friday, 7 DTs. Beautiful formula. So you see Monday to Wednesday, 2 DTEs. And then Friday, 7 days. So someone might need to write that down because that might be a blueprint Sandra just provided for someone. All right. Right. So you're seeing it work for someone. See if there's elements you can extract. It's all about extracting elements, pieces, putting the pieces together. I bet Nvidia gets scooped back up towards end of day during market close. We'll see. Okay, make sure to like the video, guys. To get the likes up. Like. We're at 95 likes. We're stuck at 95. We got 96 people joining us. We did take 3 trades today. Last 2 trades stop out. And the first trade caught a big trade to the downside. Did I miss the giveaway? Just scrolled YouTube for the last 40 minutes that I was away and did not see the video. Yeah, so the giveaway. We already had a giveaway winner. The winner was. Gotta scroll up. The winner was. I put it in the chat somewhere. BG. BG was the winner. So BG was the winner. We'll do another giveaway at 100. Another giveaway at 150. Okay. Just chop around this territory. We did get a nice little structural break. Can we continue to push below that yearly open? We are below prior shifts lows. Okay. So let's get 100 likes. Once we get 100 likes, we'll do another giveaway. Let me take a seat here. Tomorrow is Free Trade Friday. Tomorrow is Ramp Down Friday. Tomorrow is the last day of the month. Okay, so tomorrow we are going to open up the Google Meets. I'm going to share the link with the folks on YouTube to give you a preview of what we do every single day. You get to join us for our pre-market prep stream. So be on the lookout for that. I will drop the link in the free tier Discord. Okay, free tier Discord. I will be dropping the Google Meets link 9 o'clock in the morning as part of Free Trade Friday. So if you do want to get a preview of what we do, 10 a.m. If I said 10 p.m., I meant to say 10 a.m. for the boot camp. If I said 10 p.m., I meant to say 10 a.m. Eastern, guys. 10 a.m. Eastern. Not 10 p.m. End of stream poll coming up here. It is already 1 o'clock. Enjoy Orb. So far is working strategy. 100% the Orb. Check out the video, guys. The Shockwave 15. I'm looking to maybe we'll postpone it to next week. We do have the boot camp on Saturday, so I'll probably start postponing the back test stuff maybe for next week. Saturday at 7 p.m. We'll still get together for Saturday at 7 p.m. We'll do our weekly recap and prep. before we get into March. If you have any charts you want to share, bring your charts, bring your questions, bring your whatever you want to bring. Saturday, 7 p.m. For our members, we'll go over everything. All right. So we'll go over some seasonality data. We'll recap the week. We'll go over the charts. We'll plot the levels together because we're going to get some new weekly levels, new monthly levels. Okay. So those are going to be very interesting. Those levels are going to move around, and I'll break down exactly how I get those levels, so you can do the same on your chart as well. You'll follow along. All right. So Sunday we'll be doing that. Saturday boot camp, of course, 10 a.m. Eastern. This thing continues to push the downside. The wave's still waving on the 5 to the downside. So now we're returning back to the action that we saw earlier during the day. It's very reminiscent of the action that we saw earlier during the day. NVIDIA. Yes. Let's take a look at NVIDIA. So NVIDIA still has that IV hangover. NVIDIA's IV is still going to be slightly elevated from the earnings, so just be mindful of that. So NVIDIA right now is trading below that 200 EMA on the hourly. It did get below this critical key zone. All right, let's go to the hourly real quick, and we'll talk about it. Past few days we've been talking about NVIDIA. There's major resistance on NVIDIA. NVIDIA has major resistance between this 192.67, 194.45, slightly below that 195. Earnings comes around, we start to push. The day before, we get that break, we hold. Earnings pushes us all the way to 203.40 territory, and then we slice right through that major resistance territory, right? And then now we're back below it. So NVIDIA, as it continues to move to the downside intraday, if we drop down to the 5, right, see if there's a second leg to the drop, if the indexes start to drop on NVIDIA. Right, again, if you are trading NVIDIA, let's take a look at the IV. 57%. So it did drop from 99, 105%, but it's still significantly elevated. A little bit of a high IV hangover post earnings. So NVIDIA, this of course is a flag break on NVIDIA, something to pay attention to. Now breakdown. First leg, second leg kind of move. What does it have room till? There's a little bit of friction at these lows here. Ideally, if the Qs and SPY can start headed towards their lows of the day, right, that can help NVIDIA fall. Okay. Of course, it has room to that 185.67. Beyond that, if it can hold below that session lows, and then if it can start to fall off a cliff below that, then it can start to go. Speaking of NVIDIA, NVIDIA is starting to move right now as we speak. Right, you can see. So whenever you see a massive sell-off like this, all right, you automatically think legs. Okay? Think of legs. Okay? The market moves in legs. Leg one. Okay, it's going to take a breather. It's going to inhale. They just can't exhale all day. It's like a living organism. Okay? And then your best bet is to wait through this leg, find your spots, do your technical due diligence in that area, look to define your risk, and then see if you get that leg two. Does leg two have to be as big as leg one? Does it have to be half as leg one? It can be. Some people say it's the same size as leg one, half the amount of leg one. But what matters is when it starts to move, are you securing profit? All right? That's what matters. From my opinion, are you securing profit? Make sure you're paying the trader. Make sure the trader is being compensated on the way down. Right? So that's the kind of scenario we're seeing on NVIDIA. All right? So let me know if that helps Mr. Fan. Starting to see NVIDIA break down here. All right, so there's one entry here, right? The textbook channel break is right there. The best entry, of course, is that sell block grab up here, double top. into the break. That entry, of course, has the cleanest entry. So if the indexes can start to slide, continue to slide into those lows, that's going to help. It's going to help Nvidia also slide. So now SPY has these shift lows here, second shift lows, as well as our weekly PLC. So your line of thinking is if you're in the shorts already, okay, that's fine. But if you're looking to get activated, you're keeping a close eye on this here. All right, regardless of which way you're looking to go. If you're looking to go to the upside, if you're not already in the position, or if you're looking to go to the downside, you're going to have to do your technical due diligence in that area to see if there's an opportunity. All right, so what are some things that can lead back to the upside? We got the double bottom. What are some other things that can lead to the upside? You can say, hey, you know what? We got that inverted cup and handle. That bounce can be a double bottom. That bounce can be maybe a left handle. What are some things you can justify for the downside? Okay, support break, complete breakdown below those levels. Okay, formation of a lower low. We take out those lows, we continue to dump into a lower low. Okay, so lots of things can go through your mind in that area and see which one makes the most amount of sense while taking the environmental factors into consideration. Define risk, allocate risk. If the VIX continues to trade above 20, more than likely that's going to help us continue to push to the downside. IWM is literally off the charts to the downside. IWM fell off a cliff. IWM literally went in bearish engulfing, bullish engulfing, bearish engulfing. Wild day in IWM. Zig, zag, zig. Okay, zig, zag, zig. At 50-50, let's go back. Let's hit the rewind on this here for a second. $50-50. All right, so we were breaking down. One of our team members brought that pattern to our attention. We broke that down already. But you can see the 50-50. Give me 1 second, guys. Okay, back. So 50-50. That is the textbook setup you're going to add to your playbook. All right. Textbook setup you're going to add to your playbook. That's going to be great for those for data contracts. It's been a while since we got 50-50. But this is a clean 50-50. So it's going to take you, again, if you're trying to catch the full move of that 50-50, you're going to have to factor in some time. It takes about an hour and 35 minutes. Right? In this case, hour 35 minutes. So you're going to have to maybe get those ones to see if you can catch the whole thing. If you're just taking advantage, double-digit TP, letting the runners ride, you can also capitalize off of it. But this was the pivotal point. So the bulls push this thing back up. Okay, not enough to get past that 50-50. Dead cat bounce. Fell back below VWAP. EMAs continue to push the downside. Waves are continuing to wave. and now we're reaching the lows of the day. So coming into this, this is support, whether we like it or not. Coming into it, it is support initially. So once we break it, we can flip it. But as of now, this is support. As of now, this is resistance. Until proven otherwise, right? UPO, let's stretch it out just a little bit. UPO, that's how it goes. So now those opportunities are going to be tied to this area and this area. So now we're at an area already here. What are the two opportunities tied to it? There's a support hold. Buyer step in. We continue to push. Right? Does it have to push all the way here for you to TP? Not necessarily. You're not concerned with that quite yet unless that's part of your objective and you're going further dated. You want to take out those EMAs first, some of those internal key levels first. Because a 30 to 50 cent bounce is a double-digit gain, healthy double-digit gain. Right? If you're looking to go short off this level, just know that you're paying top dollar for those puts. Get as much confirmation as needed. Retrace, reject. But the bears have to do more work here than the bulls to convince us that to go short here. That's the nature of support. Okay? That is the nature of support. So even before we come into that level, you can already see it's a little bit sensitive to it. Where's the Qs? Are the Qs at those lows? Qs are... trying to see if there's any divergence. Okay, Qs are not at the lows yet. Qs are not at the lows yet. Again, guys, make sure to like the video. Let's get the likes up. We're at 95 99 likes. Okay, 102 like. Let me just refresh. It looks like 102. So we did smash 102. All right, let's continue to get the likes up. See if we get to 150. We'll do 3 giveaways. Unprecedented 3 giveaways. All right, so we're at 102. At 130, we'll do a giveaway. 130, so continue to watch until 130. If you're green, you're not missing much. Just back and forth, chop, chop, chop. Slow grind activity. ATR is now 72 cents per 5. ATR is now 72 cents per 5. Okay, let's do the poll. So those opportunities, first shift, you got to be locked in, right? I don't want to say easier, but it is simpler, a little cleaner, regardless how it plays out during first shift. So I did take 3 trades to give a little bit of profit back on those last 2. Still small green. Is it too late to enter puts? Is it too late to enter puts? So it just depends on what is making you enter those puts. What is the entry criteria on those puts? What makes you believe it's going to go lower? If there's something you're seeing that makes you believe it's going to go lower, then what level do you not want it to get back above, which will invalidate your line of thinking? Right. On top of that, understand that those puts are very close to the highest price of the day. They're probably like this. Right. So if you're comfortable, if you have an entry signal that tells you to go short here, and you define your risk, you can draw out your risk, you map out your risk, your setup presents an opportunity, then you pull the trigger. If none of those criteria are met, then there's no reason to take it to the downside. What we do know is we are headed towards support. Okay, we are headed towards support, right? So at least maybe if you can get a nice bounce into the EMAs, right, and then a rejection off the EMAs, maybe some sort of flag formation, right? It just depends on what you're looking for, right? The more systematic you can be, right, the more comfortably you can live with the results, regardless of how it plays out. 50-50 was beautiful, right? 50-50. I do have a video on the 50-50. I haven't taken the 50-50 in a while. The last 50-50 we took, I believe we squeezed 100 out of it. That video is on the channel for the private members. So go check out that video. On YouTube. It should be on YouTube somewhere. Okay. The 9 MA is right there. We're trailing the 9 MA. 15 minute. Okay, 15 minutes still inside. Leaning towards being a bearish candle is red. 5 minute bearish candle. Hourly. 2-on-2 break the downside. VIX above 15, above 20. Again, get us to 3,200 subs, guys. We're 25 subs away. 25 subs away. We've been growing fast the past couple of weeks due to your support, guys. So hopefully, you guys are finding value. Smash the like button, guys. Smash the like button. Giveaway at 1:30. And that's if you map it out, right? If you map out the trade and you lose, and the risk is defined, right? Then that's okay, right? So we just can't take those losses, those random losses, for no reason, right? Just hey, you know what? Let me just take the calls here because the wind is blowing, or because I just feel it. I mean, there is some merit to. There are some traders who do trade with gut, and I'm not discounting that, right? There are some very few traders who just use their gut, but it took years and years and years and years of experience, right? We have a trader on our team who does that a lot, right, and does tremendous as well. All right. So yearly open. 680 bounce. Yeah, if it can fall all the way to 680, that can open up the door. That 685 is trying to hold. We got into 685. Somewhat of an inverse. Left shoulder head, right shoulder possibly on the 1. Yearly open. That's the main thing. Yearly open up for grabs. Okay, yearly open up for grabs. Yearly open. First time. Welcome, Thomas from Houston. Drop your state, represent your state in the chat, guys. What state are you joining us from, country? So far, it looks like we haven't got the continent of... We haven't got South America, folks from South America yet, not that I know of so far, and Africa. So let us know where you're joining from. If we have anyone joining us from any of those places, you'll be the first one. We have tons of people from Europe, tons of people from Asia, tons of people from... We have one person from Australia already. Most of the people are stateside. Lots of Canadians. We got Chicago. Only time I train my guns when I accidentally hit the keyboard. We got Texas, Illinois. We got Puerto Rico. We got Colorado. Texas. So that's two Texases. Three. Wow. 3 people from Texas. Columbus, Ohio. We got Ohio. Anyone from Canada and Canadians? I know we got Vancouver. We have folks from Toronto. A lot of Texas. Dallas, Fort Worth. Memphis, Tennessee. Going to come downtown. We interact with that yearly open. So yearly open up for grabs. We already did the heavy lifting for the day, guys. Tomorrow, ramp down Friday, free trade Friday. Where's Loveland, Texas, guys, or Loveland, Ohio? Anyone going to the World Cup? Anyone going to the World Cup? World Cup is coming up this summer, right? When does it start, actually? World Cup. Any soccer fans? Or football fans? Okay, so it's around the corner, June 11th. We got Oregon, Medford, Oregon. Where is, okay. SPY 650 correction occurs when retail record buys. Institutional sellers, JPM data shows retail investors report record, okay. 2026, yep. Yep. So June 11th. I believe the games will be in Toronto. I think Atlanta. I think Vancouver as well. Where else? Let me look. Let me see. Okay, we got Dallas. Arlington. All right. We got New Jersey, East Rutherford, Los Angeles, Atlanta, Houston, Kansas City. Okay, they're going to use the Chiefs field. Okay, that's a nice stadium. Miami, Philadelphia, San Francisco, Seattle, Boston, Toronto, Vancouver, Mexico City, Guadalajara, and Monterrey. Okay. Kind of inverse head and shoulder-ish here. Left head, right. Do we have enough momentum to break this neckline up here, break that resistance, and go? I need to get off Fidelity. No option for OCO. What's OCO? Huh. Hampton, VA. So if you work full time and you're trading, put full, like if you work full time. I mean, kudos to you guys for tuning in, working full time, carving out the time to watch. It's very motivating to see people that try, that push, that go the extra mile to learn. How's it going, Tux Master? So giveaway 130, we'll do the giveaway. Thinkorswim allows for OCO orders. Let me see OCO on Webull. No options on OCO. Full-time work, listening via audio, and trading only when time permits. I avoid trading at 11:30. Okay. Yeah, James full-time. Naju full-time. Full-time. Yeah, always leverage the full-time. I know a lot of the sentiment is, oh, leave it full-time. This whole thing of 9 to 5s are old and played out. That's all internet garbage. Okay. Oh, you don't need who needs a 9 to 5? Oh, this is like the attack of a job, right? Just no. You need to do something, right? So especially if you've worked towards building yourself in a career, right? Don't leave it for trading quite yet. Milk it. Stay as long as you need to stay. Learn to trade on the side. Trading is not going to require a lot of time from you. Okay, because if you do commit to full-time trading, there's going to be days where you just trade 30 minutes. What are you going to do with the rest of your time? And if you have nothing to do with the rest of that time, what's going to happen is you're going to stay behind the charts and overtrade because you have nothing else to do. San Antonio, Texas. Event Security, CSU. Oh, nice. So you get to Colorado. So Dion, you probably met Dion. How's Colorado's team looking this year? Any college football fans? A 9 to 5 is the cushion to cope for the losses 100%. Just leverage, milk it, stay as long as you need to. All right, don't be in a rush. Don't put this imaginary clock that society tells you to put on top of yourself. Go with your time. All right, let's just don't go with that with the speed of don't go at someone else's speed. Okay. Yeah, any veterans, guys? Do we have any veterans in our Discord? Any veterans? Thank you for your service to all the vets. We got Air Force. Turbo Cash Air Force. This chop is what's killing it, right? This is back to yesterday's type of price action, right? That midday slow grind type of action. That's where we're at. That's where we're in now. Army. First time tuning in, Barack, is that you? No, this is not Barack Obama trading. That's hilarious. All right. That is hilarious. Welcome aboard, Sunshine. Sunshine 04. Yeah, thank you to the vets, guys. I think that's the way to go. If you ask me, I'm looking at the downscape. Of course, I have two young sons. I mean, they're still young. But the landscape of these universities, I think for young men, just my opinion, right? I think that's more useful for them to serve for some time and weigh their options rather than go to these four-year institutions and not have a clue and get indoctrinated. Right? Just because you need a little bit of that. Again, in my opinion, a little bit of that character building. Okay, and new generation, everything is very pacified. Right? Only gravitate towards things that you like doing. Only gravitate towards things that make you feel comfortable. Only gravitate towards things that stimulate you this way. If it overstimulates you, avoid it. And the reality is that's not how the world is set up. You have to have a certain level of callous and be able to navigate, because just similar to the market is not going to bend to your will. The world is not going to bend to your will. Right? You're not bending to the world's will, but you're just knowing how to operate and navigate and play the game. I was thinking The Rock. Right? So I'm just asking some people that raise their kids, like what is the best, what their take is, and just learning. Okay, yearly open, buyer stepping in. Look at that, guys. They just started to step in, just like that. Of course, I'd love my kids to trade, right? That's something you can always learn, but not everyone's going to have the same desire. So I'm not going to force it. Force you to do it, right? But if you don't have a plan, you're going to follow my plan. If you have a plan, all right, I'm on board. I'm there 1,000% till the wheels fall off. But you don't have a plan, guess what? I have a perfect plan. We're gonna do it this way. We're gonna go this way. And look at this, guys. Milton, are you on those calls? I think Milton took the calls earlier. Firefighter. So what was your experience like for the folks who served? What was your experience like, right? Of course, all the experience is anecdotal, but overall, something that even though it has its ebbs and flows, overall was a good experience? Or is it something that you've come to the conclusion and you say, hey, you know what, I should have just went the other way? And the answer is going to vary, of course, but everything's anecdotal, but it's important to hear people's take. Look at this. Just out of nowhere, buyers just say, hey, yearly open, let's hit the buy button. Okay, bulls came back from lunch. Okay, they had their lunch, came back, and then they decided to buy. Okay. Again, the question is there enough fuel behind it? Okay. Is there enough fuel behind it? Came near that territory. That support continues to push. Somewhat of an inverse. You can see that inverse head and shoulder we were discussing. Comes into the neckline. And then decides to go. We'll move this here. Like this. You guys see the inverse head and shoulders? Inverse head and shoulder, reversal pattern. So does this lead us all the way back to that weekly open? Weekly open. There's some force behind this. We're getting that rejection off that 20 on the VIX. Okay, so there can be some legitimacy behind that push into that weekly open. All right, so the bulls are here after lunch. Inverse head and shoulder. Continues to push. Now we're headed towards VWAP. If anyone took that, beautiful job. Of course, it required a lot of patience. We're going to do the giveaway here, guys. Giveaway. So, again, put your names in the chat. Put your names in the chat for the giveaway. We only did one giveaway so far, right? Did we only do one so far? Or did we do another one? I think we do only one. Okay, so we're due for another giveaway here. So names in the chat. We have over 100 likes. Next giveaway, 150. For the boot camp, if you're just jumping in, make sure to subscribe. Help us get to 3,200 subs. Tim S. Tim. Okay, we got Tom. We don't have Tim S. Okay, Tim S. Got you. Tim S. We got Greg. Okay, keep putting your names. We'll give it until 1:45 p.m. 1:45 p.m. We do have VWAP up ahead at 687.77. VWAP up ahead at 687.77. So you can see we came into this area here, the support area. Depending on how you drew your support area, if it's here, at that nice little support area, get that double bottom action. Didn't get that grab. Now we're at VWAP. So if you're looking to go short here, all right, so you can see it's very difficult to go short near support. Very difficult to go short near support. So at least get the bounce off support, see some weakness, and then go short. Because it doesn't give you a lot of room for error when you go short off support. Any kind of bounce, you're automatically in drawdown. We got it's a double T. We got Nelly. We got Hector. We got Kim Shai. We got Pablo. Okay, 4, 5, 6 more minutes. We'll do the giveaway. So do we break VWAP here, guys? Do we break VWAP here? So the opportunity for the trades we discussed earlier is applying your technical due diligence in this area and applying your technical due diligence in this area. Anything internal to these areas, you have to be a little more advanced to find your spots. All right, a little more advanced. Most times, the most basic things, fundamental things get the job done. I always use the analogy of Tim Duncan. All right, not the flashiest player, but one of in my opinion, the top 20 best players of all time. He's in the top 20. Whether you like it or not, he's in the top 20. If you're not aware, Tim Duncan is a basketball player that just used the fundamentals of basketball to win multiple championships. Wasn't flashy. Wasn't dunking the ball left and right. Wasn't shooting threes all over the place. But was using some of the most fundamental techniques to get the job done. The objective is to get the ball in the net. So if you watch him play, if you're like a basketball casual, you'd say he's boring. If you're someone who understands the game of basketball, you'll say some of the things he's doing is magical because he mastered the fundamentals. Right, the most basic things, mastered it. Something as simple as support and resistance. So you don't need 1,000 patterns. Double top, double bottom. You don't need to master everything. Okay? Just one or two things. You can't possibly trade everything. One or two things. And you'd be good to go. And growing up, I did grow up in that era when the Spurs were dominant. I used to get annoyed by the Spurs. I don't like the Spurs. All right, weekly open up for grabs. Open up for grabs. We have that VWAP right there, right above us. We have that weekly open. Do we overtake VWAP? So the 50 EMA SMA pinned, okay. What's really giving us some fuel behind that move is that rejection of that 20. IW is above that VWAP. IW has just been, all right, just split personality. Up 1 minute, down a minute, just up and down, left and right. Up and down. There's no left. Right? Just up and down. There's only up, down, and to the right. Awesome experience. Loved it. So if we cross this line above here, then we are officially green on the week. Okay, and that also means we re-enter the jaws of the gap. Okay, the jaws of the gap from yesterday. So if you think of yesterday's action, okay, this is Tuesday's action. All right, this will give us more perspective. Tuesday, Bulls got it. Wednesday, we had that gap up. What it simply means is instead of having price history incrementally, we just jumped up. Okay? We had that gap up. And today we open up, we drop, we get into the jaws of the gap. Right? That's what we did initially. So that makes us bearish in comparison to that daily open. And then now we're just basically trading right here. This is where we're existing. We're entering the jaws of that gap. We filled it already to the downside and see we push it back the upside. And now we're above that daily open. A 1 minute time frame, 5 minute time frame, 15 minute time frame. That inverse head and shoulder played out nicely. So now 3 of the 4 indexes are above VWAP. So the last time we're above VWAP, what happened? So let's see. Not here. Not this chart. This chart. So the last time we were above VWAP, we spent a little bit of time above it, but couldn't get follow through beyond 15 minutes. Okay, so let's see if there's a legitimate hold of that VWAP here. So VWAP, volume weighted average price. So it's like a moving average that takes into account volume. Think of it like that. That's what VWAP is. No coincidence that VWAP lines up with the daily open. All right, giveaway time. Second winner of the day. Second winner of the day is any last entries. Any last entries? Beautiful job, James. Yeah, IW. 100% IWM. IWM was just... We'll take a look at IWM's chart to illustrate what I'm talking about, but it's just up, down, and it's not within a range. It's taking up prior day's high, prior day's low, prior day's high, prior day's low. So it's going all over the place. It's going haywire. All right, we got Thomas, last entry. Anyone else? We got Randy. Yeah, if you're break even, great job, Brad. Count it as a win. All right. No harm, no foul. We got Rayner. Let me keep an eye on spot here. Watch out for that shooter at VWAP. Get that shooter at VWAP. We can start to fold. How do you enter? Put your names in the chat, and then you send me a DM. That's it. What if we get a topping tail on the 5 VWAP? Yep, exactly. Topping tail wick. Somewhat with the closure, inverted hammer off the VWAP. That can be some signs of exhaustion. And see if there's some follow through behind that exhaustion. Down goes IW. We got Czar. We got Arjun. Anyone else? Anyone else? Anyone else? Going once, going twice. And we will do another giveaway at 150 likes. Going once, going twice. Sold. All right, let's spin the wheel. Spin the wheel, spin the wheel, spin the wheel, spin the wheel. The winner is Pablo. Pablo, congrats, Pablo. We're starting to see that rejection off that VWAP, right? So peaks above. Nice little peekaboo. All right, peekaboo above VWAP. Look at that. Look how vicious that is. Congrats, Pablo. Join the free tier Discord. Send me a DM there. There's no way I can reach out to you. So you can send it to me in WAP or join the free tier Discord that's available and use the code BACK with your name. Your name and the code word BACK. All right, that should do. So the question is, can this 5-minute candle close? If we get that 5-minute candle closure, we break those lows. There can be some merit behind that exhaustion. Okay. And then we can start to push lower. For the bulls to counter, they need to get it back above these highs. So even this run up, okay, this is more than enough. See, there's some follow through behind it. We're 15 subs away from 5,200, guys. 5,200, 15 subs away. Let's see if we can get it done by today. We have a lot of new people tuning in this week. If you're a first-time viewer, welcome aboard. We go live every single day at 9:30 a.m. Any questions, drop your questions anytime in the chat. Yeah. So send me a DM, and then once we have that conversation initiated, send me your email in the DM. Don't send your email on YouTube. Okay, send me the DM if you're a winner, and send me an email as well, because I'm going to need your email to add it to the list for the boot camp, and I'll send those invite links to the boot camp for Saturday. All right, so I do look forward to the boot camp Saturday, guys. See if there's some follow through behind it, and it continue to push the downside. $150 next giveaway. We can get it done. 230, and we get to 150. We'll stretch it into the close again. We've been going all day, every single day this week. We usually go until 11:30, 12, and then go until 1. So we've been pushing it a little bit to provide maximum value. So hopefully you guys are finding value, guys. How we doing, strikers? How we doing? 0.43. Beautiful job. And I like how you're focused on the bigger picture. You're not focused on the smaller picture. You're focused on the overall portfolio. Good. Shook me out. You almost caught that. But tremendous job. Even profit. To profit out of that mess is impressive. So if you haven't already, fill out the poll. Strikers, 78% of the chat says no. Do call and put. So it's the other way around. So think of it like this, okay? This is the underlying being SPY. Okay, it's the other way around. So let's actually do this up here. So I'll explain to you how that works. So we have SPY. SPY is the underlying. SPY is the benchmark ETF of the S&P 500. All right, so that's SPY. We can all agree that's what SPY is. Benchmark ETF. Right, so. And that benchmark ETF, we know ETFs are a basket of stocks. So this benchmark ETF, okay, is a reflection of the 500 top stocks in the S&P, and is mainly moves, and out of the 500, the top 20 of them, top 20 of the 500 influence the movement because they have a higher allocation in those names. So 500 stocks. So we'll say the top 20 really affect the movement, right? Especially the Magnificent 7 because of the allocation. So we know SPY has a huge allocation towards Nvidia, Apple, Microsoft, Tesla, Burke. We know that the top, we'll stretch it to 20. The top 20, more specifically the top 10, really attribute to the movement. So what we're doing, what you and I are doing, okay, so we're here. We're trading, we're using this SPY to trade the derivative which is another market that exists, which is the options market. Okay. Options market. So the options market is tied to this. So what moves the option, or what the options try to do, is they try to keep up with this, because this is moving. What the S&P 500 is reflected by is this. So it's the other way. So it's the underlying that impacts the derivative. Can it come to the point where the derivative has so much movement and volume and it impacts the underlying, which is the S&P 500, which is the ETF? From a volume perspective, traded volume perspective, possibly. But from a structural fundamental perspective, this is a reflection of the top 500 stocks, primarily been dictated by the top 20. Right? So we're here, we're using the underlying, okay? We're using the underlying SM SPY to capitalize. We're using the derivatives, we're using the derivatives options to capitalize on the movement on the underlying. Because as this moves, this moves. This moves up, this moves up. This moves down, this moves down. And there are other factors that go into it. Okay, some external factors that go into how these derivatives are priced. So everything, this moves, the SPY moves everything. The reason why the options can't move SPY is because SPY is an ETF tied to these names. Right? The only thing it can really impact is the amount of volume, maybe volume on the day, amount of participation. Right? So think of SPY as the horse and think of options as the cart. Right? So always follows that. Because these options, they're going to expire over time. The only reason why we're using these options is for the purposes of leverage. Okay? You're more than okay to trade SPY shares. Right? But we're using the options because of the leverage. You can control 100 shares with one contract. Okay, 1,000 shares with 10 contracts. Try buying 1,000 shares of SPY. Right? It's capital intensive. So the leverage is here. That's the whole point of options, leverage. Okay? Whole point of it is leverage. That makes sense? So to make it short, it's the horse before the cart, SPY before the options. So the primary reason why we use it, leverage. Right? We dive into that in the boot camp as well, right? So we dive into the option section. We do a deeper dive. Okay, so and it's important to understand that, right? So it's think of it like side bets. The main bet is SPY going up and down, and the side bet is the derivatives. So same thing applies for the Qs. And same thing applies for those individual stocks as well. But in the individual stock scenario, there can be an occasion where the options flow can manipulate. You can see maybe signs of manipulation, depending on the size, depending on what kind of what the market cap of the company. Right, but on the SPY itself, it's too big. Okay, it's too big for the options market. And it's tied to too many individual things for the options market to influence it. Or to move it. Can it influence it? Yeah, possibly, but not to move it. That's a good question. And these are the small things that a lot of traders might not be aware of. So it's important to just have that mental picture. Have that mental picture of how everything works. So my learning style. Give me 1 second, guys. Okay, I'm back. Usually I have my phone on do not disturb. So I'll say my learning style, whenever I learn a topic, right? Everyone's learning style is different. Say I have to tackle a topic of options trading or just trading in general. Before I dive into the subject, I like to look at it from the 10,000 foot overview. I like to know how the bigger picture looks. Once I have a good idea of what the bigger picture is in any subject, I can start to dive deeper into the small silos within the subject and get into the details. All right. So when I learn, I need to know the broader idea of that subject, rather than starting at one key component of that subject and not know how that fits into the larger picture. Right? So for options, so when you're learning about options, is you want to know what the bigger picture is. Options is just one little marketplace. It's a huge market, but it's a tiny little piece. Maybe a little bull flag action. Double top of 200 on the 5. See if we can fuel back up. Okay, see the sellers weren't able to push this thing lower. One thing that is encouraging this time is we did get the cross of the EMAs here. Maybe that helps us back to the upside. We couldn't get that follow through the downside. Nice call on that bull flag. Nice catch on that bull flag, Thomas. Did see your comment. Okay, 150 likes, guys. We'll do another giveaway in 150 likes. See if we can hit. We're getting close. We're about 10 subs away from 3,200 subs. Let's see if we can crack that by this week. By today. And the only way for us to get there is through your support. Friends at CNBC, let's check in on them. Nasdaq on pace for its worst month since March. Okay, let's hold that thought and do our due diligence. First, we'll take a look at the QQQ, and then we'll take a look at the NASDAQ itself. Close some tabs here. Okay, QQQ. We'll jump over to the monthly. We'll take off the drawings. Monthly chart. Yep. That's the 12 month, 1 month. So what we did see in March, here's March. 11% sell off on March, and of course April, right? The tariff fiasco. This was February last year. All right, so April we went February. This is the kind of went. Then March we sold off for about 11%, from high to low. That was the range. Before that, you can make the argument for range, right? Because when they say worst, they're going from open to close. This open to close candle from November, we were down 2.5% when the month was all said and done. At some point in time, we were down close to 9%, about 8.5%. So far, if the month were to close today, all right, we're down about 1.7% from that open, close to 2% on the Qs. Okay. So from the Q standpoint, we'll check it. We'll check NQ. From the Q standpoint, all right, just from the raw numbers, from the open to close, November was actually worse than what we're seeing now. From an open close standpoint, if we get past that 2.5, we exceed November. If we exceed November, that means it's the worst month since March. But what sounds better for a headline? What sounds better for a headline? All right, if you were to make a headline and you're just you give yourself grace for a couple of percentage point room for error, what sounds better? Worst month for the QQQ since March, or worst month in the QQQ in the last 10 weeks? Which sounds more captivating? Of course, the March one. Because the March one, you know what took place in March. And March was basically when the tariff fiasco was starting to kick off, and we had April, of course, a tariff fiasco. So it's these little subliminal things that sometimes they use to make you to build your bias. Just these small, subtle things. And it's not only CNBC, it's across the board. But the cool thing is we have the numbers in front of us. Unlike anywhere else. Right, this is the only time where we can actually look for ourselves and say, you know what, okay, let me just check. And you can see for yourself. Okay. You can see for yourself. All right, we're coming into that resistance territory. Resistance until proven otherwise. See what takes place here. This is not only resistance, this is the 50-50. We did not make those low. We did not make lower lows yet. So this is still the 50-50. If the bulls want to make an aggressive rally, they're going to have to cross this area. Right? This is a key battleground. They can't come into this with full force. Right? It's a brick wall. Right? They almost need to be like a wrecking ball right through that resistance. or else they're going to get slammed to the downside. That 5's finally flipped. Now the only one that's not above the VWAP is the Dow. The Qs are trying to maintain above VWAP 608.76. They were right at VWAP. Okay, we're starting to see some pushback off that resistance. Is there some follow through behind it? Is there some follow through behind it? Qs are starting to get rejected off that resistance. Let's go to our chart here. Close this chart. Pablo, make sure to send me a message, Pablo. That was our last winner. Well, we will do one more giveaway, guys, at 150 likes. We're almost there. We had over 1,000 people stop by today, which is astronomical, guys. So you guys liking the video really does help. I guess this is in front of as many traders as possible. So I do appreciate you guys constantly showing up. So let's get to 150 to show my appreciation. We'll do another giveaway. Okay. So if you are a first-time viewer, I have a ton of videos for you to get caught up on. We've been doing this for close to, I would say, over 250 episodes. Minimum 3 hours a day. Okay, so it's been a beautiful, beautiful grind. Okay. Day in, day out, whether it's market drops, market pops, the tariff fiasco, my OG subscribers, members, if you guys recall trading that's one for the ages. Sometimes you just have the privilege. It's only a privilege in hindsight. Okay. You have the privilege to trade certain events that's going to be marked in your trading history forever. It's like someone who's saying, hey, you know what? I was there during a .com. I was there after 9/11 when the market was closed for a few days. Right? Just imagine. Right? I was there in 2008. So I haven't been trading that long to experience those things. But we're building our own experiences and document those experiences through this. So we can see, we've seen the tariffs. We've seen the invasion. Okay, they didn't declare an invasion on Polymarket. We saw the capture of Maduro. We saw the attack on Iran. We saw all these different things play out. And we still traded, and we were able to document how the market reacted to those things. And the longer you do it, your experience builds up, the better you get. We navigated the tariffs. Right? Not only do we navigate, we're also paying close attention to see what variables are moving, what instruments are moving. So you can be alerted and aware in the event the writing's on the wall next time, if that makes sense. I wasn't expecting this reversal back to the upside. I'm happy to do this. Good. That's good. It's always good to get more than what you expected. Let's drop back to our 1 minute chart. We're above the weekly open. Above the weekly open. We're about to overcome that 50% retrace of that gap. that gap from a couple of days ago. If the Qs can get above VWAP and continue to go, Dow gets well above VWAP. We just need to cross above that. Just clear this resistance. Just clear that resistance. We are trending to the upside. VIX falling off a cliff. VIX is all the way at 19. So VIX needs to stay below 19. VIX needs to stay below 19 for this to go further. Stay below 19. Do you see the time and sale, guys? How quickly the time and sale just moved? You see those flashes from time to time. 8 subs away. All right, we're above 50% retrace. Any strikers riding this to the upside? Any strikers? I know a lot of you are done. Bulls have waken up. Okay, we're continuing to push. We're headed towards 690. See if we can hold above that 688.80, 688.80. In the meantime, if the VIX can stay below 19, continue to push to the downside. That will help the case to continue to push. Let's see where the Qs are. Qs are okay. They're above VWAP. They have that continuation candle. The Dow is above VWAP. IWM continues to push. IWM leading the way. About to get to PMH. Let me just go to IWM for a second here. Just to show you. IWM. Okay. So you have the daily upside breaker here. Okay. Daily downside breaker here. All right, just to give you some context. Look at IWM. Okay. Breaks above it. Breaks the downside. Goes bearish engulfing. Goes doji. Stays inside. Goes bearish engulfing. Goes. This is on the, if you interpret from the daily. And now starting to potentially go bullish engulfing. If you can continue to push. If it gets back above this, this turns into a massive wick. Right? The reason why I say that engulfing because of the fact that it took out that range. But from an open close standpoint, it's going to be a massive, massive bright green 3-up wick. So IW, those sweeps. Okay, see if IW has a little more juice left in it. IWM, that is. IWM. Waves have been waving since 120. For the last hour, waves have been waving. Waves have been waving since the morning. We got the flip. 1044. We fell back to downside. 1035. We sold off. And we start to push now. We're about to cross that 50-50. If we get that 50-50 cross, that means we work our way out of that resistance. All right. So this is great for people that are already in. And for the folks that are already in position, they can really enjoy this. That weekly open, the bulls establish control back above that weekly open. Let's take a look at NVIDIA. NVIDIA. We're actually looking at NVIDIA on this other chart. Let's check back on that flag. Right, the flag. Okay, so there you go. So NVIDIA gets the breakdown into that 685, 67 territory. See if there's some follow through to it. If you scalp it, you can make something out of it. If you hold it, try to take it to target. Maybe you're still in the position. It just really depends how much for us to gap up into all-time highs. What catalyst do we have tomorrow? What catalyst do we have tomorrow? We have PPI. Okay, PPI. Producer price index, measuring inflation from the producer standpoint at 8:30. There's a possibility, depending on how strong we close today. If we close back above that daily open, we can close back above that 693.30, right? A potential lotto gap up to the upside is possible, right? So it's very possible, but we just have to see where we are, right? We have to see where we are. Because the thing is, for me to give you an analysis beyond an hour, right? We got to take this thing hour by hour. Because the first hour, we're selling off. Second hour, we're pushing. Third hour, pushing to the downside. Fourth hour, we're chopping around. Fifth hour, we're pushing. All right, so your analysis only has to be good for that hour. You don't have to know what's going to happen every single minute, every single hour. You just need to be right for a short period of time. And that time is when you're in the position or when you're looking to take the trade. Everything else is up for grabs. Everything else is basically to be determined. We just have to see. And that applies to everyone. Right? No one really knows. All right, so I just take it hour by hour, minute, shift by shift. So how we close at that last hour, how the other indexes act, it's going to be critical. What is this? AdGuard. We got PPI news, possibly Iran news as well. Yeah, so that's always looming, right? The Iran news always is that cloud that's going to just be above the market's head, right? One thing we do know historically, the market doesn't tend to overreact to geopolitical catalyst, right? So we have the data. We tend to not overreact. The market doesn't overreact too much to the geopolitical catalyst. What it's very sensitive to is anything that has to do with rates, anything that has to do with employment, anything that has to do with tariffs, especially tariffs. Okay, the market is just built the immunity not too long ago to tariffs. Okay, because that first tariff shock, the market essentially had an anaphylactic reaction. Right? A complete defense mode, complete attack on itself. Didn't see it coming. Second response, right? And built up the tolerance for it. It wasn't as dramatic. third response, not as dramatic. All the geopolitical responses we saw from 2025 till now, we haven't had that shock of a reaction. We had reactions, they were right. They were slightly above a normal reaction, but it wasn't a shock to the system. As of now. So for it to be a shock to the system, it has to bring a layer of uncertainty greater than the geopolitical catalyst brought previously. So for us to have that same kind of tariff reaction we saw in March and April, especially April, right? The uncertainty has to be greater than what we saw in April for us to duplicate that reaction. If the uncertainty is the same, right? The market already built up its tolerance for it. It's not going to be the same reaction. It's going to be a reaction, but it's not going to be the same reaction. And the market is really good at basically building up its immunity to these events. Like once it understands it, okay, it got it. So the question now becomes for us to drop 20, 30%. A lot of people make that argument. Of course, there are perma bears who always want to crash. The question is not when do we crash. The question is what cloud do we have above us? What cloud does the market have above it that can transpire tangibly and lead it to have a reaction because it didn't factor that particular catalyst playing out? That's the only thing that can catch it off guard. At this point, that's the only thing that can catch this historic bull market off guard. Everything else is just a normal pullback in the cycle. Right? That's the reality. That's the reality of the situation. Right? Outside of technical pullbacks, technical corrections, which happen in bull cycles, that's the only thing. Okay. All right. So, where are we? So you can see we come to resistance. And this can vary on how you enter the position. If you have that candlestick combination entry, you're in at that 688.91. If you have that break below those lows entry, you're in at that 688.73. So you see the resistance, the reaction to the resistance, the fact that we couldn't break. All right, so see if it has room to that 9 first, maybe to that VWAP, piece by piece. Anyone take that rejection? Late day. So these type of setups, they're going to require patience. They're not going to come every 5 minutes. Okay, so if you're playing it, look, there's some serious time difference between them. 10:30, 11:25, 1:05, 2:20. So in this case, the best thing to do is set alerts around your levels. So this is the obstacle bulls need to overcome. Major obstacle. Six subscribers away, guys. Let's get to 3,200 subs. That'd be a huge milestone for the channel. We're still a small channel in the corner of YouTube, growing day by day, providing as much value to everyday traders as possible. Took QQQ 697 puts here, 38 cents. See if you can hold below VWAP. Okay, nice, right? And then when you're in, just game of probability. If you take the puts here on QQQ, it's almost like this. This can work out 7 out of 10 times. All right, 6, 7 out of 10 times. We'll say 7. You can take this 10 times and work out 6 to 7 times out of the 10. This stat will always work in your favor only if you're managing the 3. The times that it doesn't work, if you're managing it accordingly, then you can enjoy that stat. That's the whole point of a high probability setup. Okay, let's take a look at that. So do the bulls have enough to break that resistance? Put in the chat. Do they have enough? Do they have enough? So if you scalp this, right? So if you're shorting a downtrend, at first is a scalp. It gave you about, depending on your entry, 95 cents, depending on entry. If you have that breakdown entry, 60 cents. But you know, by the time it gets to VWAP, by the time it gets to that territory, right, it's a scalp. Send me a DM in the Whoop app, in the free tier Discord, or join the free tier Discord. You can send a DM in the Whoop. There's a message box there that directly goes to me, or you can send it to me in the free tier Discord. Send me a private DM. Okay, use the code word back and your name, and you should be good to go. Check out my live afterwards, boss. Would love to have you on sometime. Happy trading, absolutely. Let's check it out. So do you go live every day, or what's the schedule? Edge. The thing with these lives, if you're growing it organically, if you're not using like the bots, I know in the beginning, I went through the whole process. It can be discouraging, but you're not doing it for the views. You're not doing it for anything else. You're doing it for the love of the craft. So you at the beginning, I mean, I started this channel with just 0 subscribers. Right? From day 1 till day now, same kind of content. I didn't really deviate from the content. Right? So a lot of the lives you do see with major big numbers, right? You don't have to look to the left, to the right. Just do your thing and continue to provide as much value as possible, and eventually, just like trading, consistency over a long period of time will add up. All right, they're about to break out of this. Let's see. Can they break out of that double top? And we do have those shift highs up there, so if they want to get a little trappy and manipulative, this is their chance. My rule is I like to be in the position going into the breaks. At what point of the day do options lose value? So options lose value gradually. So the life of options contract, 0 DTE, this applies to all the contracts. So if you think of the life of a contract as an interesting life, it's very similar to a human's life, but we'll make that analogy. In the beginning, of course, the contracts are full of life, okay? Meaning they have value. Sometimes they can be a little overvalued, overextended. And of course, they have their expiration, meaning they no longer have life. So the birth of a contract, the death of a contract. Every contract is set to expire and be worth 0. So things get interesting with these contracts because on these 0 DTEs, the entire life is that particular day. Once the contracts start getting past half-life, all right, they're no longer as, to use a human net, they're no longer as robust. They're no longer as valuable. They're losing value very quickly. So if you are trading those 0 DT contracts after 12 o'clock, 1 o'clock, especially 12:30, if you're trading them before 12:30, what you'll notice is when you're in the position, and your idea is taking some time to play out, you're losing value quicker and quicker and quicker and quicker. Because the closer it gets to the close, they're going to be worth 0. So it's a race against the clock. So the sweet spot is first shift, second shift. Between 9:30 and 11:30, that's a sweet spot. When there's a good amount of volume, there's a good amount of movement. They are losing value, but they're not losing value at an exponential rate. So this framework applies to all contracts, right? But you just have to fix it to their time horizon. So this would be the 0 DT. If it's a monthly contract, all right, then at the end of the month, it's going to lose value. So by basically halfway through, that's when it starts to lose that value. If it's a leap contract, 6 months in, exponentially starts to lose value, even though it has a little bit of time left. Right, so think of this as the prime of the contract, the prime. And then after 11:30, it's like it gets to 12:30, it's out of its prime. 1 o'clock, then it's on the decline. So during this time, if you take those contracts that are on the decline, they're outside of their prime, they're losing value exponentially, you need to pair it with a trade setup that has a quick response and you don't sit through a lot of back and forth. If not, you need to use these 0 DTEs if your strategy allows you for a lotto type of trade. A lotto type of trade means very, very small size, and see some sort of lotto. You're either looking to make big or lose big, but just very small size. That's the approach. All right, but all the contracts, okay, just very, very similar to us, right? We're born, and then at some point in time, we're no longer here. It was almost like we weren't even here. In between is the things we do. More than likely, we have this season where you're really in the sweet spot, in the prime, you're operating, firing on all cylinders. And then on the back end, you're looking to slow down. Okay? If you subscribe to that. There are some people who don't slow down. They just keep going. Some of the greatest people don't slow down. They just extend it as long as they can. I mean, Warren Buffett was essentially forced to retire. Right? So that should answer your question. There's so many parallels you can draw between these candles and contracts and trading to life itself. So they're losing value at all points of the day. Right? It just matters how long you're holding the position, but they start to increase in the amount of value they lose, and that loss is exponential on the tail end. Right? So yesterday we had some lottos we took. Very small size lottos. Between I believe it was between 245 and 345, I believe, or maybe 230 to 345. Right? So the lottos, from a directional standpoint, the trade was moving in our favor. But since it wasn't moving in due time, it wasn't gaining any value, because those contracts are losing. They're losing value by the minute, and then eventually by the second. And you can scroll over and look at the theta throughout the day if you're interested. All right, that's that. Out of the Greeks, that one is called theta. Okay. We got one giveaway left, guys. One giveaway. Let's get it done. 4 subs away. Let's get those 2 things done, and that would be a huge milestone. If you're a first-time viewer, let us know where you're joining from. Hopefully, we had a great day today. Tomorrow, finish out the week strong. Join us tomorrow for Free Trade Friday. Join the free tier Discord that's available every Friday. I send the link in there. Okay. I can't believe it's already Friday. It's been a long week. All right. You want to join that free Discord? No strings attached. No credit card payment information needed. All you need is your Discord. All you need is your email. And then after that, be in the trade feed. I'll post that in there. In the morning, you get to attend the stream for delay free, ad free, to give you a preview. For our strikers, ramp down Friday, ramp down February. Take some time over the weekend, guys, to go over everything. Make those adjustments. Give yourself the attention you need. Make the proper adjustments. If this is the best month you had in some time, right? Rinse and repeat. Okay, refine a few things. Nothing is perfect, but rinse and repeat. You have the winning formula. All you have to do now is just be consistent, stick to the plan. It's like if you would lose a bunch of weight, right? If someone loses a bunch of weight, right? If they lose like 50 pounds, now it's one thing to lose it, it's another thing to maintain it. So you want to make sure you have those rules and those new habits instilled, and you have those guardrails in place so you don't deviate. And then March will be a great month. Okay? We're getting close to power hour, guys. Now, for one more giveaway, we need... Let's see if we can crack 130. 130 was our record yesterday. I know we can get 150, but let's see if we can get that 130. 130 likes. Ten likes away. We're almost there. Very doable. 1,100 people stopped by today. So that's still under 10%. Okay, let's see if we get that break and continue push. Okay, let's see if we get that trap or push. We shall see. Anyone in the CNBC Investing Club? Trade ideas from Jim Cramer. I got you, Rainer. How's Inverse Kramer doing? Is Inverse Kramer still beating the... I wonder if it's beating the S&P this year. Let's take a listen here.
Company relatively AI proof?
Well, I happen to think that there's a lot more companies that are relatively AI proof than even on the list today, because I don't believe in the transhumanist dystopian notion that AI is going to take away all the really human things. But obviously some sectors are more exposed than others. So you're trying to focus on things that require direct human involvement, human activity in their revenue model.
All right. What types of industries then would you be looking towards, and the types of companies that stand out to you?
Well, because we're bottom-up investors, we think more about the companies than the sector itself, because there are companies, Dominic, in all sectors that meet this criteria. But when we focus on something like Vail Resorts, where people are skiing, and I don't believe AI is going to ski for people. Okay, so you're talking about something where there's a very obvious human component that if you take away the human skiing, you don't have a business. AIs can't do that. To me, there are a lot of examples like this, but I think people are overthinking what AI will do on the human elements in some business, but something like Vail Resorts takes away any ability for AI to go interfere with that aspect of the revenue model.
And what about some of the service-based industries where humans are a big part of it, the services that are sold to people that might be automated away by AI? Are there places that are relatively immune to that on the human services side?
Yeah, I would argue that there's places that are not only immune, but will benefit from it. And so you think of investment bankers. A lot of people are saying, oh, AI is going to come in and do a lot of the analysis, do a lot of the kind of junior level work that used to be done. That, to me, is going to make the process more efficient, but there is no scenario in which investment banking becomes a dehumanized activity. It's a very relational business. So you look at a company like Moelis that is not bringing capital markets in the way a Goldman Sachs or Morgan Stanley does. It's really their advisors, their relationships, their Rolodex, their history, experience, expertise. AI can play a big role, but it doesn't disintermediate the human element. Relationship-oriented businesses, so Moelis is a great example.
All right, skiing and investment banking. David Bonson, thank you very much. We'll see you again soon, sir. Thank you for that. Kelly, I'll send things back over to you.
All right, gentlemen, thank you both. Appreciate it. Coming up, this automaker posted its first ever annual loss due to some EV write-downs. The name and the full story right after this.
Trivia, does anyone know what that automaker is? Put in the chat. Automaker, loss, EV. IWM calls, 266, holding thoughts. Yep, you're in good position. You're above that prior day high, above that 265.32, above that 265.51. Okay, looks nice and green. Nice green candle on IW. Continues to push. The orb high is at that 66.17. Just again, manage accordingly. So if you get some follow through on this next 5-minute candle, break above 265.86, it continues to push. Ideally, I'm not sure what your entries. You want to see if it can hold above that 265.51, and definitely hold above that 265.32. If you're in above 265.51. Tesla, how's Elon doing? Let's check on Elon. Tesla. Okay, it's Tesla. Zoom out just for a little bit so it can give us a little perspective. Tesla got some sort of inverse. And I don't see that inverse head and shoulder on Tesla, possibly. Okay. But right there. Let's zoom out. I know Tesla has this nice, this resistance up ahead on Tesla. Intraday, multi-day potential inverse head and shoulder brew on Tesla. Intraday, Tesla did break below those lows. Broke below its daily downside breaker. Okay, right here. Once it broke, it just could never get itself together. So Tesla, of course, is bearish on the daily. Broke below those lows. Broke below that 50 on the hourly. Nice retrace reject. Daily downside breaker, along with that 50 MA on the hourly. Makes these lows at 403.67. So bigger picture, if we just zoom out, see if there's a right shoulder maybe for a push back the upside. If it just completely collapses, continues to push lower, then it maybe works all the way back to those weekly lows. As far as on the weekly is concerned, Tesla did trigger that weekly upside breaker. So nice little bounce on SPY. This setup was the bread and butter yesterday on that slow grind higher. So whenever we had one shift ended, the shift over shift handover, right? They used that as support multiple times. That's what we saw. ATR 62 cents now, 62 cent ATR. All right, let's do the giveaway, guys, at 100 and what was the likes record yesterday? Goal is to break yesterday's record, 137. So let's get up over 137 likes. We'll do another giveaway. 137 likes. We'll do another giveaway. VIX still below 19. If the bears want to make a legitimate push, they need to get it back above that 19. Outside of small scalps, the downside, the trend is to the upside. Okay. Nice push, nice bounce. The main thing is, remember that resistance that the bulls need to take over. All right, they are able to get it done. Okay, we got that nice push. See if we can create more separation. This is the window. This is the window of opportunity for them to capitalize and make this drive to the upside into power hour. Drive to the upside into power hour. If they can get this above 690.10, 690.90, that'd be very impressive. Okay, that means the gap was filled to the downside and is filled back to the upside. All right, so zig, zag, zig type of scenario on the SPY. Zig, zag, zig. 2 subs away from 3,200. Let's get it done. Sancho, Marine Corps. Oh, what are you going to school for, Sancho? If you don't mind me asking. I might have asked you before, but I might have forgot. Was it physics? I think it was physics. Vail Resorts. No. Yeah, some of this, I mean, to avoid automation, Vail Resorts is what we, no. Stick to SPY. Right? I mean, it's like, my thinking is this. Which side of the AI trade do you want to be wrong on? Okay. Do you want to be caught on, hey, you know what? Okay, there was an AI bubble that completely crumbled. Everyone loses. Or do you want to be left behind? Okay. Which one would you have more regret? Which one would you have more regret behind? AI is actually a thing. You had a chance to really get in relatively early on the growth curve. And then it turns into this massive thing 20, 30 years from now. Or it's just a fad. It dies down. You were wrong. Everyone else was wrong as well. And something else comes up. I would argue the other scenario. Right? It will be more painful if you were right, but you didn't execute, versus if you executed and you were wrong. Okay, we're going to be wrong anyways at some point in time. But this AI one, this is the biggest one that's in front of us right now. Okay. Okay. Seen some sellers here, some selling. Still not enough to change the waves. We're still in the jaws of the wave here at the bottom end. We start to crack that, push back lower. We've got an engulfer on the 5. With VIX, not the VIX, Q's VWAP 60877. 60877. Okay. Power hour 1 minute away. Power hour dump, power hour pump. For some, any tips on trading lower time frames? For some reason, I can't handle anything below 5 minutes. So stick to the 5 minute chart, right? So stick to the 5 minute chart. If you don't like anything below 5 minute, all right, just stick to the 5 minute chart. Right, so don't go down to a time frame that you're not comfortable with. Whatever works, whatever helps you get that read. One thing is, the price of SPY, or the price of the underlying, whatever you're trading, is the same on all the time frames. Okay, whatever time frame you look at the price is the price. Is the same. But you're just using these time frames, these candles, based on whatever time frame you're deciding to trade, to be able to paint a story or a narrative for your decision making. And then based on that, you have some critical levels that you can base your decisions off of after you define your risk. So if the 5 minute gives you a better read, right, if you're able to interpret the action on the 5 minute better than the 1, stick to the 5. Okay, but just understand those 5 minute candles are larger. So make sure you take that into account. What I mean by that is a 5 minute candle, this one is 66 cents versus a 1 minute candle. So just make that adjustment as far as risk is concerned. A 5-minute candle stop and a 1-minute candle stop, two different things. Hourly candle stop, 1-minute candle stop, two different things. They all look like candles, but they're all different sizes. Okay, you see this hourly candle right here? It looks like just a regular candle. If you measure it top to bottom, that's close to a $4 candle. So if you're trading the hourly, if you say, hey, you know what, my entry is the hourly breaker, my risk is the bottom of the 4-hour. If you don't know how much the 4-hour moves, it moves for that particular 4-hour $4 range. That's a massive, massive range. Okay, massive, massive range. So you have to be able to use whatever time frame, get the right measures, and draw out your risk, and take it from there. Okay, it's a nice bounce off that 9 and that gap. Nice bounce. Two subs away, 8 likes away. 2 subs away, 8 likes away from the giveaway. Okay, so make sure to like, make sure to subscribe if you haven't already. If you're a first-time viewer, let us know you're joining from. Long-time viewers, take the next steps. We did take 3 trades today. 1 good quality setup and 2 stop outs. I go back, rewind. So the last 2 trades were 2 stop outs there. Double-digit stops. First trade was a nice drop here in this territory, and of course it just continued all the way through. Okay, all the way through. 9 EMA bounce. And a bounce off that 9 EMA along with that 688.90. Okay. All right. This is the time for it to make, if they're going to make a push. Let's see if they can make that push above that 690.10. That means we zigzag that area.
From Anthropic or whomever, and the stocks go down, like CrowdStrike and Palo Alto and Fortinet and the ones that we talk about all the time.
Well, look, a lot of this, I think, is also tied to behavioral. So behavioral factor, I think, is very hard to measure. Sentiment gets very negative, and then people start extrapolating stories linearly, and then sentiment just gets very negative, and certain areas just get crushed pretty aggressively. And I think that's kind of what happened in software. This is the biggest non-recessionary crash in software that we've seen in 30 plus years.
I was going to say 30 years. Do you find that it's getting harder in the work that you and your team?
Yeah, software, guys, is in it's gonna be tough because a lot of this software and programming can be done. All right, you guys see what's going on especially if you're on the AI algorithm side of X. A lot of the OpenClaw, Claude things that are going on with the Mac Minis, the demand for the Mac Minis. Right, a lot of people are doing a lot of cool things with that. And software. These big software companies, they're on the clock. They are on the clock. What are those contracts going for now, Eduardo? Get them for 25 cents. They're probably $3, $4. Hi, I'm actually new to the group. Every morning, whether we or every morning will be alerted by entry, calls, and puts. Yeah, so whenever I take a trade, I just let you know what my ideas, the rationale, my risk. Usually between 9:30 a.m. and 11:30 a.m. That's the prime time hour. And again, it's just to share the idea. I don't want you just to blindly take it. Right? I want you to understand the rationale, see some of the setups that might work with your style of trading. If you don't have any setups you're trading yet, go through the educational content videos on our channel. There's a strategy there available for you. I'm going to make more strategies available in there. I'm going to have more videos breaking down the strat. I'll have more videos breaking down the EMA strategies, more comprehensive videos, right? And that's going to be added in that area, so you can kind of go through that gallery, go through that playlist, and pick and choose what works for you. Take it, test it, and then apply it, and take it from there, right? So even if you take the course that comes with your plan, this would be a great place to start, right? Great place to start, so you have an understanding of what continuations are, what reversals are, what kind of strategy we look for during those times, what are some candlestick combinations we like in certain areas when we see support, resistance, supply, demand, all those things, right, are here. So you can start equipping yourself to take advantage of those setups. Right, that's the whole point, to get you trained and to get you to be a confident market participant. 165. Wow, those went. That's what, 6x. Okay, but most of the trades that take place are during 9:30 and 10:30. We do take some other trades time to time, but it's been a long week. I did give back a little bit of my profit earlier, and my protocol is after red, I just try to get as close to green as possible. So it could have just been a one and done day. Right, so that's the call you have to make as a trader. Again, you are your account manager, so you have to make that call. If I catch a trade, am I done? Do I take more? Do I stop? So all those things are different trader to trader. But welcome to the team. Kadmala, is that how you pronounce your name? And most of the chatting takes place in this chat. So on Monday, we're going to have a new chat. So you see this chat, guys? Every month I start a new chat, okay? So this is February's chat. So everything this is kind of, this goes into our archive. You have access to the archive, but moment in time, all the trades you guys took, all the trades, so you can go back and see what worked. That's why it's so important to share your ideas, talk about the things you're looking at, because you can go back in time and say, hey, what was I looking at this particular time? What setups were working? All right, so next month, February, March, there's going to be a new monthly chat. It's going to be a new monthly chat. All right, all the chats are here. All right, so we started in April. You can see. I mean, shout out to Lynn, shout out to JB, shout out to Fido. Have been here since April. Carlos, right? Richie, Thesis, right? And then May. How do we close out May? All right, May was a little tough. 60% of the chat was, 40% was green, 60% for the ones who voted. Red, Doctor, JB, Richie, Taco, DC, Lynn. Now you can go back and see. And that's the whole purpose. Sometimes I'll tell you guys, sometimes in trading, you do it for so long and you go through periods where you kind of forget, I don't want to say you forget your setups, but you're trading so much. If you're not tracking it diligently, you can have a lapse in where you forget what you're trading if you're going through a rough patch. If you haven't been through that before, right, the best way to get through that is having everything you documented. Going back to that. So if I ever go through a rough patch where things are just not going in my favor, just can't find anything to work, I always go back to the chat. I always go back to my videos. And go check it out. And make the adjustments. Okay, what was I doing there? What was I doing here? What was I? And it's just you versus you guys at the end of the day. So the coming month, or that's our second chat of the month, so 2 months down. All right, you can see last month. It's a moment in time. Instead of having one chat for the entire thing, all right, it's every month. All right, so we got a new chat coming up, fresh chat, fresh month, many, many things ahead. Probably we're seeing some divergence up there. Sorry, I missed it. So I was basically saying, Katmala, most of the trades come in between 9:30 and 10:30. That's when I take the bulk of the trades. And all the resources are there to get you confident, to learn different strategies so you can be in position to capitalize off those opportunities. May was tough because of tariff. Yeah, May was tough because of tariff. We navigated. I did used to, right, it was a little daunting tracking the ideas for the day. I used to do that. Right, but it's better to do it. In my opinion, it's easier for me to do it verbally. Okay. So you can see something like this. So the alerts and of course the idea recap. Okay. So I might go to this kind of weekly format. We'll see. We shall see. All right. May was a tough because of tariffs. Sold at a good price. You sold at 80. I mean, 80, that's still doubled your money, right? More than 100+%. So tremendous job. QQQ. Slip and slide. Did it fall below VWAP? Yes, it did. Back-to-back bearish engulfing candles. Okay, we took out those highs. Salesforce engineering on earnings beat.
And revenue. Jim, the first time I was on your show, I think it was $1 billion in revenue. We're talking $46.2 billion. It's just a 46 times since 2008 when I was first. 2009, I think I was first on the
2008.
show. Amazing.
Well,
and Jim.
Yes.
Jim, that, of course, was one of our first SaaSpocalypses. You know, remember that? You said I had to come on the show because it was a SaaSpocalypse. And then, you know, we lived through the 2020 SaaSpocalypse when you're like, oh, how are you going to survive through the pandemic? And here we are, Jim. We're in another SaaSpocalypse.
Well,
I got to say, Salesforce CEO does sound very optimistic. Right. He has the right kind of attitude for that uphill battle for software. And that's what you want to hear. All right. especially if your company's getting beat, especially if your company's in the middle of a quote-unquote SaaS apocalypse. SaaS is simply software as a service. So when you think of the stack, software as a service, SaaS, is your company just operates on the software. Everything below the software layer, all right, everything below the software layer, the network as a service, networking, everything is outsourced. Typically, it's outsourced to one of these three: AWS, okay, GCP, Google's cloud provider, or Azure. So as a software company, instead of building the infrastructure needed to host your software, okay, all the networking layer, the applications, everything like that, the only thing everything else, one of these three providers, sometimes you might have redundancy and have it on multiple providers, okay, depending on your structure. All right. These are the backbones. So they do all of the back end and you just build the software. So that's the SaaS. So all those software companies, they just essentially just building the software and selling the software as a service, subscription service. It's a very straightforward business model. They don't take care of anything at the back. Any of the back end is already taken care of. If you think of Netflix, all right, Netflix, right? Where do you think Netflix hosts all of its movies, hosts all of its data? AWS. All right, so now I want you to think of this analogy now. Think of these three, okay? Think of these three big players. All right, so think of GCP, Google Cloud. Think of AWS. These are the big three. And think of Azure, Microsoft as the three grocery stores. Okay? Three big grocery chains. All right, those are the three big grocery chains. So if you're a software company, there's no reason for you to sell your product. There's no reason for you to have your own store for this product. What you can do is, hey, you know what? Hey, Google, let me buy some shelf space here. Let me buy some shelf space here, and you host my product. You take care of all the back end. So you know what AWS did? Okay, AWS, very similar to what Walmart does. Okay, if you notice, so what does Walmart do? If you look at the grocery store shelf or any of these grocery stores, what do? All right, they rent the shelf space. Okay, the middle shelf space of the top players. All that is already taken by the big companies. Right beside that, so the big shelf space is taken, central shelf space taken by the big companies, right? For different things in different aisles. Once this company has this space here, right beside that, what do they have, guys? They have their own generic brand right beside it. Because they get to create the rules. It's their store. So they're undercutting their partner. The reason why I'm giving you that example is because this happened between Netflix and AWS. For a long time, AWS is hosting Netflix, all right? So AWS is hosting Netflix in their quote-unquote grocery store, in their data center. Netflix has all the front end. AWS has all the back end. AWS sees all the back end data of Netflix, how much traffic it gets. What does AWS do? Or Amazon? We're going to create Prime Video. Right? We're going to create Prime Video. So this is equivalent to Walmart having Coca-Cola on the shelf and then seeing how popular the sales of Coca-Cola are and making their own spin-off generic brand. Right? So basically these big players, these three big players, any software they host, all right? So the problem with these software companies is they're not independent. They're dependent. They're only software based because that's the easy way for you to raise capital. That's an easy way for you to reach profitability because you're not building out the whole back-end data center. Your path to profitability is so much shorter because you just need to hire the talent. You have the idea, you raise the capital, you use that capital to hire the talent, to hire the engineers, and let's go. Let's tackle the problem. So that is under pressure. But these big three players, they can care less what product's on the shelf. If it's popular enough, they'll duplicate it. If it's popular enough, they'll duplicate it. So now the whole software space is being disrupted because the solutions they provide to their clients or to their customers, whether it's B2B or C2C, right? It used to be a proprietary solution. Maybe there's a paywall behind that solution. Now their customer or their client can use AI to do what that software does. So they can build it in-house, they can utilize AI in-house and stop outsourcing the software to get the job done and start insourcing AI solutions. That's why the pressure's on software. Right? Because first of all, they're not independent. The infrastructure's not there. So now if they start losing those contracts, okay, all these software companies start losing those contracts. Most of it is just corporate deals. Right? Most of the software names are B2B. The big software names are B2B. They're not B2C. Right? Any element of B2C is a small portion of the revenue, especially for the big ones. So that's what's playing out at the current moment. They're stuck between a rock and a hard place. They don't have the independence to stay on their own. They're just software as a service. They have no back-end infrastructure. So the bigger player behind them can easily replicate what they're doing, release a generic model, the grocery store analogy, and from the front, they're getting attacked by companies insourcing AI and outsourcing the software because they're no longer needing it. They're taking out the software because they no longer need it. So they're stuck between those two things. And that's why you're seeing that software sell-off. Hopefully you got the reply. Any questions, guys? We'll look to wrap it up here shortly. We went all day once again. Appreciate the support. We hit 3,200 subs. Let's see how many likes we got, and then we'll do the giveaway at 3:30, and then we'll look to wrap up. As always, tomorrow is the last day of the stream. Tune in 9:30 a.m. Eastern. Join the free tier Discord to be a part of Free Trade Friday. We'll look to close out the week as strong as possible. Look for the best setups tomorrow, and then sail into, of course, March. Saturday, we have the boot camp, so make sure to sign up for the boot camp. We'll talk about all that in just in a second. Before we do that, let's do the giveaway. We're at 100 and let's see if we can get 130 in the next 5 minutes, and then we'll do the giveaway. Okay? If you learned something, if you enjoyed the stream at any point, folks on YouTube, put a fire emoji in the chat. If you found it valuable, fire emoji in the chat, spam the chat. Strikers, any questions? Okay, get ready for March. Boot camp goers, get ready for Saturday. All right, we'll do the giveaway here in 4 minutes. Last giveaway of the day. We got 132 likes. All right. What is it? Did we get the 350 algo? Brad, Gary, Seek Wisdom, Inner Joy, Randy, Miguel. Speaking of software names, let's take a look at CRM. Right, since CRM, Salesforce. Go to the 12-month. We will go to the 12-month. Okay, CRM. Whenever you think of anything long-term, start off at the 12-month. All right. Before you think of anything long-term, just start right off at the 12-month. That gives you a better picture, okay? So each of these candles, we know what candles are, right? They're 12 months apiece. This is 2025. This is 2024, 2023, 2022, 2021, so on and so forth. So software hasn't seen back-to-back years of selling, or CRM hasn't seen back-to-back years of selling since 2004. I saw 1 year of a sell in 2008, 2 years of a buy. 1 year of sell, 1, 2, 3, 4, 5, 6 of 4 years of buy. 1 year of sell, 1, 2, 3, 4, 5, 6, 7 years of a buy. 1 year selling, dip gets bought back up in 2022, 2 years of a buy. So now Salesforce is doing something that hasn't done before. So it's breaking that pattern because now the pressure is on the software names. So now we take a look at this 2025 low near that 221.92, and we get a quick measure. Okay, from all-time highs, just a rough measure. How far away are we from all-time highs? All-time highs being 369. We got as low as 50%, 52% from all-time highs. Okay, we are currently around that 40% off all-time highs. During this sell-off, okay, after making all-time highs, we were down 56%, 59%. So this current sell-off we're seeing is not to the degree of the one that we saw in 2022. But in 2022, again, in 2022, the entire market sold off. Okay. 2026, the market is close to all-time highs, nowhere near a 15% correction, 20% correction. But we are running to the downside. So the last thing software needs now, so worst case scenario software would be if the market sells off. That would accelerate that, push the downside. So bigger picture, we know one thing, Salesforce, just to give us just a holistic not a holistic overview, but just to give us a general understanding of this particular software name in the space, which is a big one, right? One of the leaders in the space. Okay, let's drop down to the quarterly chart. On the quarterly chart, this is the 2022 sell-off where we dropped about 60%. Okay, 60% pullback. We saw 1, 2, 3, 4, 5. I would say crash. 60% is a crash. All right, deep bear market territory. Right. 1, 2, 3, 4, 5. 5 consecutive quarters. Each of these candles represent 3 months. And then we finally, on the 6th quarter, we saw the reversal. So in this case, this sell-off we're seeing, the Q4 2025, we actually got a nice bounce, no reversal, and Q1 2026, we broke those lows and sold off. So now you want to keep an eye on this quarterly candle going into the end of March. When we take a look at the monthly, okay, on the monthly, we're starting to hammer slightly. So you can make a case, right? If you come to the conclusion after doing your fundamental due diligence of the space of software, your research, and come to the case, hey, you know what? Come to the conclusion that this is an overreaction. Then you'll start building a case for CRM and some of the names in the space. Hey, you know what? There's a potential dip buy, monthly reversal opportunity if we can close this as a hammer. And then go 2 down, 2 up off this major support territory. Right? If you don't believe in that case, if you think there's more to it, that it can push all the way into 2022's lows, and that's around that 113 $126 territory. It's currently at 199, just shy of 200. Then you want price to stay below 50% retrace of the quarterly, 50% retrace of the monthly, and not get that bigger, higher time frame monthly or quarterly reversal. And you want some sort of response here. And that response, let's go to the daily real quick, to just translate to a dead cat bounce off of some key levels back to downside. Right, so it just depends from what lens you're looking at this from. If you're a buyer, right, if you think it's overblown, it's overhyped, the sell-off, okay, then you want to pay attention to this monthly candle and look at that weekly candle as well. Because on the weekly, we did have earnings, nice engulfing candle, you can see. All right, so it just depends from what lens you're taking a look at this from. Right, that buying, selling, what is it? And then start to build a narrative and a case around your idea. Okay. And don't rely on media sources. Don't rely on anyone else. Just rely on the data. Everything else is secondary. I'll go as far as to say everything. That's the last box you check. Okay, you can look at institutional flow. You can look at the fundamentals. You can look at the software space entirely. You can even do a deep dive in software, how things work, what's the architecture, who are the players, who has contracts with CRM, who's their biggest partner, who's their biggest B2C partner, how long is that contract for, what are the fundamental numbers looking like. So fundamental analysis, right, that's more like detective work. It's like forensics. And you have more time to do fundamental analysis than you do to do the technicals intraday. So it's a different, slower pace, building a case, and the technicals and fundamentals, along with the environment, need to all line up. Okay, so let's do the giveaway here. Giveaway, and then we'll wrap it up. Any last entries, let me know. Pablo was the last winner. If not, we'll spin the wheel. Winner is Hector. Hector is the winner. Hector, congratulations. Congrats, Hector. I'll put your name in the chat if you're still there. Okay, Hector, make sure to claim your prize. Any questions, guys? Any questions? Any questions? Jam-packed stream today. Hopefully you guys found value. Great job, trading team. Tomorrow, all right, tomorrow's what counts. Let's close out the month, the week strong, and start making your plans. All right, so anyone not taking any trades tomorrow? Is anyone taking the rest of the week off and kickstarting their weekend early? Okay, chopping around. Chop, chop, chop. Mostly lottos on Friday. Yeah, those individual names, those individual stocks, those lottos do open up. If there's any ideas, I'll post in the Discord, guys. All right, so just take them as lottos, of course. Don't put your whole account behind it and expect to do something crazy, right? Just pick your spots, take it from there. On that note, guys, we'll go over how to join the community. We'll go over the boot camp. Of course, the boot camp is in 2 days. We have Friday and then we have Saturday, 10 a.m. Eastern, 10 a.m. Eastern if you did sign up for it. Okay, I do have your email details already. I'll add you to the list. If you want, make sure to reach out to me. Need your email in the DM. Send me a email in your DM as well. I'll add you to the list as well. And then we'll kick off the boot camp 10 a.m. Eastern. 10 a.m. Eastern, Saturday. That's when the boot camp is. All right, so make sure to join us then. If you're still looking to sign up, you still can sign up. There's still some spots available. All right, there's a boot camp, SAT Get Started Day Trading Boot Camp, live boot camp, not pre-recorded, live 10 a.m. Eastern, February 28th. If you can't make it and you signed up, you can always attend. If we do another Getting Started series, you can always attend that again. You also will be sent a copy of the video, a copy of the slides, access to my courses, and so much more. All right, so you have access to all that. If you're interested in joining our community, right, use the code TRIAL30, right? So maybe a couple of spots left. The month is going to expire tomorrow, and then we're going to open up maybe 10 spots for the trial for March and take it from there. You have access to everything, okay? All the tools, supportive community, day trade, swing trade, automated technicals, 24/7 stock market news feed, my ebook, 2,000 plus hours of trading, live trading video for you to go review, option trading beginner course, 6-hour course, high 100 ideas, extended trading coverage, pre-market prep stream, ad-free, delay-free stream. So if you're enjoying it on YouTube, there's a slight delay on YouTube, right? On Google Meets in our community, there's no delay. There's no ads, there's no delay, and of course, access to the full Discord. Any features I add in the Discord, I'm looking to add couple of more features in the Discord. Some software stuff in there, maybe some flow data in there for our members to capitalize off of, right? If they like that stuff, just to add more value, we'll look to add more stuff in there. So again, code TRIAL30, save 25% off your first month. If you're looking to lock in for the year, you get a free bootcamp ticket that comes with the plan, bonus, as well as a coaching call, a private coaching call, and save 4 months off the monthly. This is the best bang for your buck. $399, one payment, 12-month access. Okay, this is basically three 0-day DTE at the money contracts, right, give or take. 3 0-day DTE contracts. You have access to all the resources to take your trade to the next level. Monthly, $50 a month after your trial period. Courses, self-paced courses. This is included in your plan in the Discord. If you want the course on its own, we We have these two available. Coaching, one-on-one coaching also available. All right, merch, support the merch. Travel book bag, Under Armour SAT bag. Of course, process over profits journal, process over profits tee. And our most popular, the SAT Power Mug, okay? Traders who have been using the mug have seen a significant increase in their win rate. All right, so that's all qualitative data. I have nothing to back it, but that's what the data is. Just a reminder: see profit, take profit. One of our mottos: don't be wrong for too long. Just a reminder every time you sip your coffee or your hot beverage or your cold beverage, whatever it is, a friendly reminder of the two most important things. Okay. Any questions, guys? Any questions? So will the live group be here? No, our group is in Discord. They have access to the audio. They have access to Google Meets. Okay. You can see our group, just phenomenal. Traders, guys. Sancho catching his stride. Right, look at that, just amazing. All right, everyone sharing information, helping one another. Iron sharpens iron. So it's almost impossible to be in here and not get better. Right? If you're really putting the effort, you're really immersing yourself with the resources, immersing yourself with the other traders just like you, just like me, just like everywhere else, just like all of us, right? It's almost impossible for you to get worse. You're naturally going to get better. Right? But just give it some time. You have to give it some time. It's not going to be overnight. There's nothing I can do to make you some perfect trader in 24 hours. That doesn't exist. It's a process. And what you realize is there's nothing that I can do to get you to the next level. All the resources are there so we can bring the best out of you. Okay? Profitability is already within you. It's already somewhere there, somewhere within you. You just need the tools to bring it out. You just need the framework to allow it to come out, to shed some of those bad habits, to drop the old way of thinking, to unlearn some bad habits, learn some good new habits, and you'll be well on your way. All right? Any questions, guys? Any questions? As always, absolute honor, absolute privilege. Let's close out the week strong. Smash the like button on your way out. Any questions, let me know. Strikers, any questions? Folks on Google Meets, any questions? If not, we'll look to wrap it up here, guys.
I have a question.
Yeah, what's your question?
So I'm Beverly, BG, the one who won the first giveaway.
Yeah.
So when you say DMU where?
In the Discord.
In the Discord. So are you at Smart Action in the Discord?
Yep. At Smart Action. Yep.
Okay, I'm just clarifying. I'm new to all of this. So.
It's okay. Anytime you need help, you feel free to shoot me a message. I can help you. And I also have your email on Whoop as well. All I need is the email, because when I send out the link to the bootcamp, it's going to send you the reminder through Google Meets.
Okay. Alrighty.
So you can send it to me there as well.
Okay.
Okay, no problem.
Thank you.
You're welcome. Any other questions, guys? Any other questions? For the Free Trade Friday link, it's going to be in the free tier Discord. So you have to join the free tier Discord. No strings attached. It's here. All right, join in there, and then tomorrow 9:30 a.m. I'll drop the link in there. No, 9 o'clock. I'll drop the link in there. So you do have two Beverleys. Yeah, I think there's two. Yeah, there's two Beverleys. So there's Bev and Beverly. So I think I got your DM. Do you give out expectations for the day? You mean like game plan? My game plan are the levels I'm paying attention to? Yes. Game plan, levels. We go over the game plan, the Discord as well. I send that out every morning. So I send the game plan before our pre-market stream. And then if we need to make adjustments to the game plan because there's catalysts, there's different things, we just make the adjustments during that time. Okay. So all that is sent in the morning. All right, let's take a look at this 350 algo and then we'll wrap it up. See if we can get some action on that 350. So the game plan is in the private Discord, not the free. All right, 350 algo. So biggest takeaway, we were above that weekly open. Okay, so we're able to get above that weekly open. So far on the week, we are slightly green on the week. Slightly green on the week. We're below the daily open. So the bears did win today, right? Just from an open to close standpoint. But so far, the bulls are slightly in the lead as the week is concerned, as far as the week is concerned. See if you get some volatility on that 350. Sometimes it's just a muted close. Okay. On that note, guys, we'll wrap it up here. Thank you for tuning in. We'll see you guys tomorrow. Hope everyone found value from the stream. Stay safe. Have a great rest of your day. And God bless each one of you.